Okay, what's up everyone? I'm still alive, okay? Sleepless after sleepless night and work and all of that stuff, I'm still alive. Now, I don't know how many of you have joined. Say hi in the chat so that I can see or I can know that who are currently watching. But yeah, I'm still alive and the whole day I didn't trade. As you can see on my chart, there is not a single trade placed. The only trade I placed was here, sell short. Let me zoom it in. Took the profit right at this level, which is, I don't think it's 1.8er because it was more than 2. Okay, yeah, because this one moved a little. It is here. So yeah, that was the stop loss. That's why there is the line. However, this was the first partial that I took out of those 3 contracts, and the second one I just moved my stop loss here, so that gave me another few $100. Hey Janice, how are you? Good evening and welcome. I think this is the first time you're here, so if you have missed my yesterday's streaming, I was live executing. At the same time, I was sharing some of my personal findings, which is the last fair value, how you can utilize that thing. So today, yeah, like yesterday, what happened is I traded on my funded account the London Silver Bullet, and during the New York session, I choose to like have some fun with a new Apex 75k account, and on that account yesterday I made around $1,600 or $1,800, something like that, during the live session. Today, before, like, I was not even thinking about streaming, to be honest, and I was sleeping. Like after returning home, I was sleeping the whole day, so I missed my London Silver Bullet, and I'm glad I missed it. Okay, so why I said that, because the reaction from the 15 minutes breakaway gap or first fair value gap, this reaction may have caused me a losing trade. So yeah, I mean, why I said that is because when this reaction happened, it has taken sell side liquidity, gave me a beautiful market structure shift over here. This was the fair value that I might use to enter into a trade, but on the other hand, as I look into the first fair value of any move, maybe depending on this fair value, I would have avoided that entry and wait for entering here, since it failed to break above, so no long entry over there. However, that was the first fair value during the silver bullet that market broke below, retested, then delivered the sell side. So yeah, I mean, this thing works like magic. Let me show you today's entry so that you guys can understand. Now here is my entry. Okay, I didn't consider entering from the fair value, like this fair value, and why I didn't consider is because the same thing, first fair value of this entire move, when market broke below that, that is the first time I entered right at that level. Okay, and stop loss was here because I believe this candle high will be protected. If I'm on the right side, this will be protected. Same thing during the London Silver Bullet, you see this, so that was the high that was supposed to be protected, and as you can see, like market never even went that far before crashing like crazy. So yeah, first fair value concept entry, 3 lots of entry that I have taken over there. I will share some other things as well, but for now, so 585 with 1400 if I exited all the positions here. But yeah, like I love to hold it because there are so many liquidity levels over here. That's the reason I closed partial 2 lots over there and left the rest runner with a trailing stop loss at this level. Oh sorry, here. Okay, so too many things, but look, I trailed my stop loss at this candle's high because I believe this, if market is willing to continue lower, this will act as a proportion block. At the same time, when market took this liquidity, look, it failed to displace below that level. So that was a sweep on liquidity, not a run on liquidity. So by this, I was pretty confident that this will be hit. When it was hit, market was going higher. That was my last fair value. I entered from the last fair value, took a partial at the most obvious level because this is my funded account. I don't like holding positions or giving up on the profit I can make. So yeah, I mean, this is 1450, this is 2525, so nearly 10 handle over here. And the other position, I took 2 lots over here. The other position, I closed that first fair value. Okay, like I draw it on the phone. Okay, don't get me wrong, this is how it looks like. That is the level I took, and that is 3.25R. okay, like the last one. Now the handle, it might be 19.5 handle or not a very good profit, but the risk I have taken with 2 lots, it looks only $240, so $780 from, like, it's not exact 780 because I closed 1 lot earlier, 1 lot here. So most obvious level I closed, the other level I closed. Why? Because that was the first fair value from this move. Now when market broke above that, I was still thinking about taking another trade, but since I saw, like, I have, let me show you that how much I have. Just give me a second, because this is something personal, so I don't really want to give up on every personal details over here. I have already given up so many. So this is the 2 trades profit that I have made, like the first and second trade of the day, okay, on my funded account. Now let me just log out of my funded account and bring back the what it calls the Apex, the fun account, and let's see. Now about the Apex, yesterday, as I said, like, today I didn't trade anything over here. So whatever the profit I made yesterday, that's 1592. Yeah, so it's sitting like that way. But when I researched a little about Apex, I have to, if I take this seriously, okay, if during my live stream, if I want to complete this seriously or show you guys how I can utilize this account or something, regarding this account, I must have to do or like I must have to approach this account differently. Why or what do I mean by that is, Apex has a trailing stop loss or loss limit. So let's say on the 75k account, this is my trailing loss limit. That maximum loss I can get is until this far. When price is going up, you are in a buy trend. You see, this is how far price went, but if it comes back and stops me out at this level or below this level, my trailing stop loss trails with the unrealized PNL, like whatever the open PNL is, it trails with that. So even if it hits me here, my next maximum loss limit will be just this much. It's not based on how much profit I made, it's based on how, like, what's the highest profit I saw. So when I saw that, I thought, like, okay, so the last trade that I took on yesterday's live stream, I was holding on position that came down and gave me a stop loss of like, not a stop loss in a profit, but let's say like market went until that far, it stopped me out around here. So from here to here, whatever the profit I saw, that is already a loss for me, because they work like that way. So yesterday I was talking about some obvious level, I was not closing the position because, as I said, like, okay, let's see if it can go there or not, this sort of things. Okay, I was explaining those things. That specific part is like it's disturbing and distracting, because you cannot do that with Apex, which is a problem, because I wanted to have fun with this account. But yeah, I mean, it is what it is. Now, as you can see, this fair value entry that worked out perfectly, I exited here. When market closed above that, yes, I know it created a fair value, but why the retracement happened right here? It had so many fair values here, okay, so many. So I literally ignore whatever is here. When I'm taking a buy, I ignore this one. I look into the left. This is the fair value that I should be using. When market tapped here, this was the most obvious, and this is a 15 minutes breakaway gap. The low of that was most obvious. So how could you utilize that one? If I was willing to take another entry, that low or this low, however you want to put it, this was your target. So that is 17.75 handle. But you saw, like, it played out beautifully, the same way this one played out, the same way this trade played out. Okay, that was the low, the most obvious target. So I closed partial at that level and like kept a runner for the rest in a profit. Okay, like not even break even, in profit, because that's the money I'm seeing here, is it's my money. Okay, in a challenge account or something, yeah, I mean, it is also your money in a sense, but in a challenge account, that doesn't make too much sense. Like, you can hold for a longer period, that's completely okay, but in funded account, whatever profit you have seen, the whole profit is yours, right? You can withdraw that money. In a challenge account, yeah, maybe you can complete the challenge quickly, but you cannot keep it. Hey, good evening, brother, how are you, Shiva? Yeah, so I again utilize the first fair value concept, not this one, this one. Took beautiful profit, utilized the first fair value concept, broke entry until that first fair value. I don't know how it worked for you guys. Hey Birandar, how are you? Welcome. So Janice actually asked me a question, if I'm not wrong, about how long it actually takes a trader to like learn all those things and become profitable, things like that. The thing is, first of all, you don't need to start with like after learning everything. Okay, you don't need to consider everything in terms of becoming a profitable trader. You have to understand one thing, but properly. When you understand one thing, let's say like ICT has 82 entry models, all I'm using is the fair value, so I'm disregarding 81 other entry models. He has Judas swing, he has unicorn setup, box setup, rejection block, order block, breaker block, so many things, right? So why I choose fair value is because it's very clear. Okay, you know where the fair value is. On the other hand, this is a Judas swing, or this can be a yeah, like Judas swing entry. So below the stop loss or below the sell stops, you can enter. You have to put your stop loss in a like in a proper way, maybe 10 handle, 20 handle, I don't know how that thing works. So below the stop loss, if it works out, you will get a huge profit. You will catch the low of the move and like lowest part of the move, and you will make a huge profit like this way. Okay, like 5 or 6 or 7 or things like that, 50 handles, 60 handles. But how do you know where it gonna reverse, right? There are so many things. Now I made loss in silver bullet trade NQ. I hope my last trade is correct. Yeah, I got your point. If I was sitting in front of my chart, I would have done the same. Maybe I'm bit confused. Okay, like as I said, I look into the last fair value, this candle, when it gave you the market structure shift, it failed to close above that last fair value. So that can be a possible reason that I might not be on the wrong side. On the other hand, even if I got stopped out, what exactly happened here on from this liquidity grab market structure shift? When market went up, this is the only fair value it created. When market broke below that, look, that was the fair value to enter for a sell short. This is how big of a move that provided. So yeah, I mean, it's coming out of the 15 minutes last fair value gap or the breakaway gap. It gave you a liquidity grab market structure shift. Everything was perfect until this far, but yes, this one sent like price failed to close above. That's a problem. Maybe I would took, or I would consider taking a loss, then I would go for a sell short, things like that. I'm not 100% sure what I would have done during that time, but this day it didn't play, or it didn't work the way it was supposed to work. Okay, like liquidity grab from a 15 minutes last fair value or breakaway gap, market gave you a beautiful displacement and market structure shift, fair value gap, everything was there, but it didn't work. So I mean, I really don't know what I would have done, but if that was the case, then I would utilize my last fair value concept. Okay, when market closed below that, maybe I don't know, like I got stopped out with this week or something around this area, because I don't really need to put my stop loss all the way back here. When the fair value is here, this black candle's low might have been an area to put the stop loss, because that's the third candle's low or maximum, like here, not below that. So this candle might have stopped me out. When I saw that fair value is broken, this is a place where I could go for a sell short. But as I'm saying, like, since I was not here during the moment, I think I would not talk about this one. Like, I should not talk about this one, because since I was not trading, or I was not here, I don't know what exactly I would have done. Or maybe, like, I don't know, if I would take the sell short or not. Even I would look for another market structure shift with fair value around this area or not. It's confusing. I cannot say because market fall I would take a sell short. It will be something that's not realistic. On the other hand, here, as I said, like, most obvious, if you think this trade from here, this buy side was the obvious level. Just after tapping that area, market started going higher, this buy side. Okay, this 15 minutes bullish first fair value or breakaway gap, that turned into a resistance for very long time. Now, where could I have been like a profitable trader, or maybe took a sell short or consider a sell short? This is where I could have done this. Remember, during my previous stream I talked about this, like, you want to see 15 minutes fair value gap, last fair value gap is broken lower, rejection from the 50%. In this case, this is a rejection, but since the body went higher, I would consider to see some fair values around that area, which it provided. So when 50% rejection done, market again closed below that. The low of the 15 minutes could have been a entry point, but since there is a fair value gap it has left, I would consider entering from there rather than the low. But even if you enter from the low, your stop loss has to be above this high, because that high is very important. This is the high that was created during the 50% retest. Or if you missed the first time, that you got confused or something, you missed this time, when market broke below, again this is a perfect rejection from the 50%. Market came lower, it has given you a small liquidity grab. Let me zoom it in. You see, this is a liquidity grab at the CE, or 50% of that fair value. This is your market structure shift, because that's a valid swing low. To do that, you have a fair value over here, and that is also the low of the 15 minutes that fair value. So the same concept, market again broke lower, went to the 50%, rejection from there, broke lower, you can enter literally on this move, okay, on this move, but that high is important, remember, that is where you have to have your stop loss. But if you are not still in a trade after this rejection, when you got the break of a structure, now you are not like maximizing or utilizing this on only, you are utilizing the 2022 IT model, liquidity grab, market structure shift inside of a inversion fair value from higher time frame or higher time frame point of interest, you have a fair value gap. So in this case, if you waited for this far, then your stop loss could have been here, because 2 times rejection from the middle point, next time market should not even go there, and you can, if it's giving you enough profit, you can target here. It's 3R, nearly 3R. Now how I decide, like, yes, I know it's only 18.5 handle, but how I decide that this is good enough for me? I look into the loss that I'm taking or the risk I'm taking, okay. If on my 100k account, I'm happy to take up to $750, so 6 lots, 5 lots, 3 lots, 4 lots, whatever, like 4 lots is giving me $500 of risk. $500 of risk, I can, just by targeting the low over here, I can make $1480. So I don't really look into the target ticks or handles, things like that. I mostly look into how much I'm risking and what I'm getting out of that based on my entry. 6.25 handle of a stop loss. Now even if I take, let's say, 1 lot, that's $370 for $125 risk. This is something you have to work on. Like, I am not fixed on my lot size, okay. I'm not fixed on I will take 1 lot, or I will take every trade will be on lot. I'm not fixed on that, because why I'm not fixed? Let's say you entered from here, your stop loss is here, okay, at that high. Now you are with 1 lot, you are risking 9.75 handle, which is $195, and you somehow got stopped out on that. Here your stop loss is, if you enter from the low of the fair value, it's 7.25. so here you are getting 9.25 handle loss, here you are getting 7.25 handle worth of risk. If you take 1 lot, and the, like, I don't know if it's making sense or not, but a stop loss will vary, right? A stop loss, sometimes it will be bigger, it will be smaller. So if you are fixed on the lot size, your stop loss will cause you losing more than gaining. That's one thing. You cannot be fixed on taking like 20 handle every time. I will take 20 handle or 20 pips worth of profit or something like that. Also, as I'm saying, just think this way. If you have a fixed amount, okay, not lot, amount, 4 lots here will give you $500 worth of risk, which is 1% of $50,000 account if you are using one of those. At this low, if you close your 50% or take a partial, okay, at this low, even at 1 to 2, doesn't matter. If you close your partial over here, you can leave the rest of the 2 runner for whatever the next point of interest is, which can be here or even like there, those lows, okay. If you look at that, the other 2, so how much you are getting with the first partial, let's write it down, let's make a calculation. 740. Now if you have the other runner, let's say just by this much, okay, so now it's giving another 940. So how much you are getting? I'm not even talking about all the like holding until this low or something. Since I'm seeing the price, I'm not even talking about until this low. I'm just talking about the most nearest possible area from where market can reverse, because if I'm not wrong, there is a very small little fair value over there as well. Yeah, so this fair value, the first fair value. Okay, so this can be a possible reason for market to go lower. So if you just hold until the top of that fair value, just this much, that will even give you another $1,000 or something, 1080. So altogether you are making $1,820 or something, instead of just having one lot closing for 20 handle or whatever. Like, I don't know how people actually takes their profit or targets their profit. It's completely up to them. As I said, I would love to take a partial at 1 to 2 if it is there. Okay, but why this is a better option? You see, this is a huge unusual week over here. So the CE or the midpoint can send the price higher as well, because this week is considered as a fair value gap. The midpoint is considered the same way we consider a fair value gap's middle point. So market can easily reverse from there when there is this sort of unusual week sitting at a low or at a high. So that can be my first partial level, that yes, I'm happy if market goes lower or even comes higher. I don't care, as long as I can take some partial here. I will put my stop loss at break even or at the most obvious level. Where is the most obvious level here? You see that a small little fair value, so that candle high can be a most obvious level. So entry partial, this is where you put your stop loss and leave the rest runner for whatever target you have. Maybe let's say this is also a very unusual week at the lower end. Okay, the swing low, this is a very unusual week, so market can easily react from that level. See, like when market came here for a short moment, yes, it reacted. When you are confident that market will go lower, look, after the reaction or rejection, it has created equal low. On the other hand, this candle closed below that, created a fair value. That is giving me confident that yes, if I am still in a trade, I can continue holding the trade. But when market created that fair value, started to respect that fair value and come lower, this high is where your stop loss should be right now. If you are trailing your stop loss, this is where your stop loss should be, until wherever level you are anticipating, maybe this low, or if there is anything else around that area, you must have to keep your stop loss here. Once market is done taking the liquidity, if you are in profit, whatever, if you are placing any limit order based, like we trade like sell stop, buy stop orders like this. Okay, so if you have any manual stop loss set, you must have to close that manually as well. Otherwise, when market will go there, it will give you a buy long position straight away. Okay, that will be a problem. So that's the way I try to maximize my profit. Okay, if I'm not making sense to some of you, it is completely okay for you to utilize your own way. It is completely okay for me to utilize my way, because that's how I have built my psychology, or I have built myself. Actually missed. Yeah, so let's see the last hour, and let me, I did not try sell trade as I'm on my phone. Okay, so let's talk about higher time frame fair value. Okay, like 15 minutes, forget about the market today, it's whatever, let it do or let it play out, and let me talk about fair value. So this is, let's say, your 15 minutes last fair value gap. 15 minutes or hourly, whatever, like higher time frame fair value. What you expect is, if it's a bullish fair value, you expect like market will come to the fair value, maybe middle point or whatever it is, it will go higher. Last fair value, remember, let me change the color so that the last fair value makes little sense. This one should act as a breakaway gap. So why it should act as a breakaway gap? Because when there are multiple fair values like this way, okay, FVG back, see, like I have marked it a long ago, but I didn't even utilize the trades around that area. When this last fair value market trades into, we expect that it will leave at least some portion open, okay, if not it will leave completely open or something, things like that. It will leave some portion open, which happened right at the silver bullet here, okay. It just came inside of that with a wick, the same candle closed inside of that 15 minutes fair value, so everything worked out perfect until this far. But when market tapped into that fair value, it crashed like crazy. So like this loss was inevitable, to be honest. Like if I was sitting there, this loss was inevitable for me as well. I don't know, like if even this could have saved me from taking that loss or not, because it worked out perfectly until this far. Then when this happened, I can do two things. Either I can utilize this if possible. If that is not possible, then I will wait until it breaks below that, gives me the same thing that I already discussed. But let me go back one more time around that area. Wait, yeah, we expect that either market will not come to this fair value, because there is another fair value like this one, okay, that will send the price higher and it will be unfilled. If that is not the case, maximum market can come inside of this fair value, then market can give me the reaction from that, and the rest of the portion will be unfilled. Now a breakaway gap, if it is a strong breakaway gap, we also expect that market will not go to this CE. If it even goes to the CE, okay, see, like this is building up the thing, okay, step by step. First thing what we expect is market will not come to this fair value at all. Now it came to the fair value. Now what we are thinking, quarters theory, okay, like you have to divide every single thing in 4 parts: middle point, upper portion, lower portion, and the quarters theory, the quarter. So I'm expecting that, okay, if it even comes, maybe the first quadrant or first first quadrant or first quarter will be the area from where market will go higher. Now this area, market came, market went higher, worked perfectly, beautiful. If that doesn't happen, if market goes to this, now I'm expecting the first half will hold the price, send it higher from the breakaway, okay, the first fair value gap. If that doesn't happen, I'm expecting market can go to the third quadrant, but if no body closes below the middle point, the CE, the consequent encouragement, okay, the middle point, let me actually give the middle point a different color, maybe this, yeah. So if no body closes below the middle point, that is a better indication that yes, it wanted to trade the middle point, it has traded that, now it is rejecting. So this is the third quadrant. Now it closed below that, the only thing that can send the price higher now it has become a low probability, okay, it was a high probability, it has become low probability. This is the last fair value that I'm talking about, not this one, okay. It can be completely traded, it can be disrespected, whatever, but this fair value, the fair value sitting below this fair value, this is the breakaway gap, the last fair value of a bullish move, okay. Why this is important, I will come step by step. I hope after this the fair value thing will be very clear to you guys. When it closes below the middle point, it becomes pretty low probability. Now it's a low probability if it closes below the middle point, because it is very powerful. First of all, we expected it will not be traded. Even if it is traded from the upper portion, it will go higher. It didn't happen. Now from the like upper half, or however I can take it, like above the middle point, it will go higher, the second quadrant. Now from the CE it will go higher. It's not happening, right? Step by step you are continuously you are getting wrong by thinking that now market will be reversing or going towards the direction you are anticipating. It came below that. All I'm expecting right now is it will keep on the lower quadrant something or some portion open. If it can keep some portion open and then give you the reaction, still this is valid as a breakaway gap, because a breakaway gap is just another fair value gap, but when market trades into that, it must leave some portion open. I'm not utilizing, where was it, let me give you here. You see this fair value, I didn't even utilize this fair value. Yes, it's also a last fair value of this move, right? This fair value. But when market traded here and came lower, it was completely filled. That is where market is respecting still, because it found some resistance here, it's finding some support here. I'm not utilizing that information here. I utilized this one first. Okay, I looked into this one first. Same way, when market was going higher, I utilized this one as my entry point, not that one from here. Same way, when market was going higher, you see, like it was just tapped by the lower portion. When it was tapped by the lower portion, this became your, from this swing high until whatever you can see, isn't this your first fair value? So when market went above that, look, it came back here, went higher. Now what did I said about this? Try to target the most obvious level. For this one, this is not a most obvious level, because to go there it needs to break above this 15 minutes bearish breakaway gap. What is that breakaway gap? That's the first fair value of a bullish move that was supposed to send price higher, but it failed to do that. Market came lower. When the first time market revisited that, it left the entire lower portion, or like the three quadrants over there, 3 quarters open. It just stepped into the upper quadrant, it went higher, took this immediate liquidity, started coming lower. The next time it came lower, it literally disrespected everything. When it disrespected, the same concept that I just talked about, when it's disrespected, the same thing. Now you are expecting what? Market will either revisit the, this is now the first quadrant, okay, like the quarter. From here market will reverse, or market will reverse from the middle or second quadrant. Same thing. I'm willing to see market will go to the middle point, but it will not close above that. It can go with wicks or something. Now when that happens, when market breaks below that on your lower time frame, especially in the lower time frame, I want to see if you are looking on the same time frame. For example, let me first come with this part. When this happened, okay, you see the lower time frame, this is somebody closed above the middle point, but the upper quadrant sent the price lower one more time. This part was unfilled. Next time market went the middle point, it rejected perfectly, then send lower, close below. Next time it went, the first quadrant sent the price lower. Now look into the 15 minutes chart during those moments. See the rejection from 15 minutes. By this time market didn't even break below that, okay. By this time, look, this candle, this break, it sent in the 15 minutes back inside the 15 minutes candle. This candle was the first time market broke. So when this was happening, like around this area, this is where the first time market closed below that fair value, So what was the first revisit? This green candle was the first revisit. This was the first revisit. So whatever you are seeing here, this is not where you have to look into. Look here. This is 15 minutes. Broke below, closed below. The next candle, when it revisited, this was that revisit. Okay, when I'm hovering my mouse here, when I'm hovering my mouse around this area, look into this green candle. Okay, this green candle's high. Your eye should be on this green candle, okay. When look, where is the high? Now let me even draw a line on this side. I'm drawing on this side, but look on this side. See that high? Where was it respected or rejected from? The middle point. When market again came and closed below this, okay, the fair value. Where was it closing? Here. Let's see where is the close. That green candle's low. So when it, or maybe this black candle's low. Let me look at, yeah, so this black candle. Why? Because if you look on the time, this candle started at 4:14 and finished at 4:15. That is a 15 minutes candle closer. So when this closure happened, that was the 50% rejection and closed below again the fair value gap. When that happened, the next time market will not even go to the first fair value, the middle point. That's why your stop loss has to be here. When market traded back inside the lower portion, even if there is no fair value, let's say like this fair value is not here, okay, this one is not here, the entry is based on your 15 minutes fair value. So this is your entry, this is your stop loss, and whatever the recent high low, whatever you can find your take profit, that is where you should take profit. If you are holding, must close some partial at a certain level. Now the same thing, look into the 15 minutes. Market came below that fair value, disrespected that bullish PD array, went to the middle point, closed lower, went to the lower portion. I will just draw it little right side so that you guys can see the wick. It displaced lower. This is how you can utilize your higher time frame fair value gaps. Now nothing works 100% time. When it will work? When you will have this vision. Why I keep a 15 minutes chart here? When first time it broke below that fair value, I will be looking here, okay, that was a fake breakout, because it went back, that was a fake breakout. How I could confirm if it is not a fake or not? That middle point close above, then I have to hold or I have to wait, because I'm expecting the middle point will be respected. Again market came lower, went up. Now I can see, yes, on the 15 minutes it is actually disrespecting that and breaking lower. When that happened, I'm expecting the retracement up to the middle point. That's the max I can see. Market is going with a body, okay, like wicks can go even from here, wicks can go until maybe here, no problem, but no body should close above the middle point. What happened here? That cannot happen here. When that happened and market again breaks below, the next, like when it closed below, even if you can be in a trade from this candle, okay, like there is this dozy candle that you can see, you can be in a trade from this, no problem with that, because now you have the confirmation on the 15 minutes that market broke below, went to the 50%, rejected from there, closed below that fair value. By this time already you are looking into a trade. Why? Because look into this candle. This is the first candle of the next 15 minutes. This is 4:15 candle. 4:15 candle means When the candle starts, the time is 4:15. When it ends, the time is 4:16. So this is the next 15 minutes candle. So what this candle's wick did, that was the starting of that wick. Okay, and that's how far the wick was. This is how far the wick was. Look here. See? So you can literally enter from the first candle that is revisiting that low. And a stop loss, as I said, whatever the middle point rejection high is, that high should be your stop loss. If this wick was too big, like this way, then what you can do is you can take a Fibonacci retracement, look for the CE, just put there, like around that area, CE, because that will act as a fair value gaps middle point as well. In a lower time frame, that acts as a fair value gap middle point. I hope this part you have understood. So what we usually look into is a, okay, let me get back. Yeah, so what we usually look into is a rejection or close below that rejection from the middle point. No body can close above that. When market comes, now market can do another thing over here. Okay, this is why I draw it, but first went to the clean example. Market can do some consolidation inside of that area like this, and the final move can happen like this. A body closed here, wick went up above those highs, market came and closed below. Now what is this? Accumulation, manipulation, distribution. You can enter from here until whatever low or sell side you have. Okay, so that's how you can utilize a 15 minutes last fair value gap, not the first one. Okay, not when market broke below the first one. This one no longer necessary. Even if market can revisit that area, it's not necessary at all. This one is most important. And by the meantime, I hope you guys got the point. Okay, like how you can utilize the fair value. Same thing, why I'm using the 1 minute last fair value for longs and shorts at the same time. Like just took a short, made the profit, took a long, made the profit until this far. Why? If you missed it at the very beginning of the stream, I shared the entry that I took, because same concept guys, same concept. This is 15 minutes chart, and what I said is I'm looking into 1 minute. When I'm looking into 1 minute, that's what I want to see in 1 minute chart. But think this way. This is 15 minutes fair value, that market broke below last fair value. If I'm entering from the 15 minutes, when it closed below, I can enter here. Okay, literally if I'm entering from 15 minutes, this is my entry. But where have to be my stop loss? Above this candle size. As simple, like same way, the way I shared my stop loss over here. Okay, that candle size, the candle that broke below, that candle size. Here, look, that this was the candle that caused the break. So my entry looked something like this, and then targeting a little lower than that low, somewhat around, like exactly somewhat around this area, I got my profit 2.44 or something. That was the entry I already shared. But as I'm saying, I'm entering from this. Okay, based on this, yes, there was this fair value, market traded up to that. I don't care about that anymore, not anymore, because it's better to have other confluences here. This is more powerful to me. Okay, this is more powerful. Same thing, just look from this big fair value. When market broke below, that was your entry, a stop loss. Now this is a very big stop loss. In this case, I might have put it around this area, since there is a order block as well. But entry I could take from here. I don't need to look into that fair value. Market just tapped into it. Like when Tuesday, something like this cost me nearly $4,000. Okay, something like this. What do I mean by that? I had a, as I said, like out of my, hey, the zero, how are you, brother? Welcome. So I had a aggressive account where I look for like large lots or big entries, okay, with big stop losses. On that account, on sorry, just a second, guys. On that account, I put 6 lots or 7 lots worth of entry over here. When market did that, it filled up only 1 lot and it went lower like this, okay. When that happened, like the whole move, I got something around $1,100-$1,200. Think about it, like 6 lots, 5 lots completely filled, and then that move. So I, by looking into the fair value that way, I didn't get my complete entry filled. But same thing, if I had it here, I know market cannot go like all the way back to that level. That's my belief, right? It's a huge fair value. Previously it was partially filled, market took the buy side liquidity. One more time when it revisited here, it was still partially filled, market failed to go above or take any liquidity, broke below. So this fair value, this big one is a better chance for me than this one. Now it's a huge fair value. Mostly in 1 minute you will not see that big of a fair value every time, unless there is a news or it is like 9:30 opening or something. This thing is a better option for me, okay, rather than looking into this. Yes, what I can do, take partial or like take 2-3 lots here, put another whatever, like whatever your risk management or risk percentage allows you to do. You can take some here and try to take some up there, okay, instead of taking all or trying to take all here, because not every time it will go there the same way here, okay. The same way that I was showing here, not every time it will give you a very good entry point, rather than like just revisiting the upper portion. Now here we had a very good alignment, it's a balanced price range over there, because left we have a fair value, right we have a fair value. But look, the first time it came, it partially filled, came lower, it kept some portion open on the top, failed to go low and take any liquidity. There is no fair value gap around this area except here, but market didn't even reach to that fair value. It started going higher, closed above, came back on the top. That is my entry. I don't care about how many fair value it left here. Where my stop loss should be, below this candle or below this, that's up to you, like how you feel confident about it. But that's the max you can go with your stop loss. The entry, as I said, like I didn't take it, but it has delivered until where that 15 minutes last fair value that is holding the price for very long time below it, okay. That is how far it's giving 1 to 2.1, not that move, okay, this move it's giving 2.15. Is it a bad trade for me? No, I don't care about 17.75 handles, okay. I care about how much I'm risking. So even if I take 2 lots, it's only $330, getting $710. Good enough and happy. I'm happy with what it can provide over there. That's the thing, okay. Now market came all the way back to this fair value. Let's see how it does over there. And this bloody fair value, look, I know I'm not utilizing this fair value to enter into a short trade if broken, but because it was not like it was completely filled, it had no portion left over here. But when market came into the fair value, this is where the body closed. So the body was respecting, or price was respecting that fair value during that moment. It sent all the way up there to take all those buy side liquidities. Now you see this, that fair value sent higher, that fair value sent higher. Okay, I'm on my apex, right? Let me check. Yeah, apex. Let me check. This is a juicy area, guys, because so many below that, and I don't believe it will hold for longer because it has created so many. Okay, come on, don't go too fast, bro. Give me an entry close below and give me an entry. I'm already putting my sell limit order, although it didn't close below, but I believe, okay, it gave me the entry already. This is my buy stop. This retest will be the entry. Okay, like I'm already in a trade, but the retest will be the entry. Don't worry about my trade, because the move, I felt like it might not go until that far. Should I close a partial here? Because that is a sell side liquidity. This one, no, it doesn't make any sense to close over there. Okay, it makes sense to close here, the rejection block area here. It has provided enough, guys, don't get me wrong. This low from the entry 99.25, 87.25, so that was 8 handles or something with 2 lots. I'm still okay. See, like when the max profit was until this far, market is going higher, my max drawdown started moving like this. Okay, I don't know like why they have choose to do that, but it's based on the open profit. Okay, it's not based on how much you have closed out of the trade. That's a equal low now, but again it has created bloody weeks and weeks. Okay, that's the thing I hate the most. Let's see if it plays out or not. So yeah, I mean, so the revisit will be the entry. I would love to take another entry over there, another lot, because it's looking juicy. I put another one. Equal. I don't know if it will. Okay, now you should give me the entry. Like I just added another one over there, so let's see. Beautiful. Let's see if I'm on the right side of the market or not. I'll just take off the positions because that's too problematic. As I said, there is no guarantee. Okay, there is no guarantee, because it will work out every time, then everyone will be profitable, guys, just by using that concept. So keep that in mind. And as I said, this is for fun only. These equal will be taken, that's what I believe. At the same time, I have to see or look into something else as well, like is there anything that can send price higher around that area on the higher time frame, of course. Okay, 15 minutes. No, it didn't even tap into the C. So let's see. That week is a huge week on the 15 minutes as well. Nothing. Yeah, I'm expecting market will come until these. So let's see. Let's see if it plays out or not. If it plays out or not, Do not press your button if you are trading. Okay, as I said, I don't care about this account. I have made enough profit on my funded account. I have shared with you guys already at the beginning of the stream. And this one, Apex has a huge problem. Okay, like every time the profit is going above the previous profit, because I added on a lot. Now I think by this time the profit I saw until this far, I'm seeing more around this area. I'm willing to do another thing, guys, because of the rules of Apex. At this level I want to buy on lot. Okay, like the most obvious level, and then let's see how far it can continue. 3 stages. Even though it is for fun, I want to keep the fun the way it should work. Okay, $480 profit. I can easily move my stop loss in break even or something, but I'm not willing to do that. I want to see that partial is hit first, and that's how you can actually complete your challenge as well. So yeah, I mean, it is what it is. Let's see. I'm expecting a big move now. Like this will be the first fair value, expecting a new fair value below that area at this level. If that can happen, market will crash like crazy until that 600. It will surely kill my trailing stop loss. Come on, keep a small little fair value over there. Okay, it failed to do so. Doesn't matter. Equal. Once a partial is hit, I will move my stop loss to break even. Before that, I cannot do anything. Okay, a big move, please, like this. And why I put here is because that's the fair value and breakaway gap. Okay, on the 15 minutes here, the fair value that was previously respected, and the fair value or breakaway gap that market never even traded. Okay, so that's the only reason I put it there. I don't look into other time frames, to be honest, but it is what it is. Okay, like the expansion looks really good to me, and the entry so far looking good to me. Too much. Sorry guys, my mouse, my keyboard, everything is like mechanical, because when I program I like the clicky noise. It keeps me awake. Okay, it keeps me focused, it keeps me awake. That's the only reason I use this clicky noises or this sort of mouse. Okay, it's rejecting again. Do not do that. Okay, yeah, this time it actually closed below, so let's see. So from my max drawdown, I am now down by how much? Let's see. Because of the rules of Apex, 2750 was my yesterday's max drawdown. From that, since I didn't realize that the way they work, I didn't take $290 of profit. It came to 2460. The high I saw here, like the highest price came until this far, was around 600 something. I don't remember. So it became 1800. Now if it hits my stop loss, what will be the max drawdown? This is bullshit. I don't really like the way they are whatever, like I just need to calculate the stop loss. That's another 500. 510 on a 75k account, a risk, it's perfectly okay, but the way they operate their stop loss or other stuff, trailing stop loss, it will be only $1,300 that I can take loss maximum, but also if it goes in profit, that's also a trail. So keep that in mind, guys, keep that in mind. Okay, it created a fair value respecting that, and it has, yeah, it has perfectly respected the middle point of that one, like no body close below the middle point. So yeah, I mean, it may now go and give me a beautiful stop loss. Still, let's see until a stop loss is hit, I don't care. And that fair value was also broken. Until this one is broken, I'm not too eager to call it a opposite move or something, because the 15 minutes expansion was good. Let's see how far it can reach. Okay, if it goes to the order block level, it will surely hit my stop loss and then go to the order block, so nothing to do over there. Apex, and this fair value, like if it leaves this fair value, then surely market is going higher for at least this far, okay, that high. But if it, yeah, that's what I was saying, like if it can fail to create that fair value, that will be a better option, because that can be a possible sweep on liquidity instead of run, and this candle is valid to send it lower. Let's see the mean threshold of it. Yeah, I mean, it is valid to send it lower, so let's see. I'm still hopeful about this trade. All I want to see is market breaking below this one more time. Why is it too hard for you, bro? $600, but that rule doesn't make any sense to me. Okay, like the rules they have selected, it doesn't make any sense. If you are in a unrealized PNL, that continuously keeps trailing. It's like trailing threshold or something they call it, the system, max drawdown system. I'm glad I saw that. Okay, I saw that like today, because if I didn't see that, and if something, like let's say when market was here, it didn't even hit my stop loss by that time, and it exited me out of my trade and said like, okay, you failed your challenge or something, I would like, what the hell just happened? I had this much profit, I never hit my max drawdown. Why I'm out of my trade, and why I'm failing my challenge? Isn't it? So for that only reason, I actually looked into the trailing threshold, because I was not sure like what is their max drawdown limit. Okay, just break below this one, that will be good enough. Yep. Oh no, I thought that broke below already. Come on. F you. It's not too hard, come on. Yeah. Serious? Look guys, how these sort of things, okay, like this is the only fair value from that high to this. When market closed above, market revisited that, went above, took the most obvious liquidity. Now when it coming back here, it's finding it very hard to close. Look where the wick stopped and started going lower. That's how, what, why it took so long for the price to give me that profit. I shouldn't have any delay. I'm paying for the bloody service. For now this is a good, okay. What was the message? Take profit. It's okay, it's okay. This is, I have already made the profit. Where this is my elder brother, for those who doesn't know, okay. I'm just focusing and practicing the silver bullet strategy to pass a funded account challenge as per your rules, as you are my mentor. Only trade only one trade a day with stick 1 to 2, and it is good idea. Any suggestion? Okay, the suggestion I can give you, okay, like risk, if you are risking, how can I say this? So if you are risk, okay, so this is based on my stop loss. Where is the 1 to 2? That is the 1 to 2. So here, okay, so based on my suggestion, okay, let's think this way. If you have practiced enough, practice a little more. If you are using a 50k account, I don't know like which broker or what prop firm you are using, but if it is a, let's say it's a 50k, whatever, I'm just giving you example based on the top step. This is the one I know the most and I have idea about, the most idea about, okay. So now price can go higher. This is the most obvious level and my stop loss was, but still I'm not believing that market is going higher from here, okay. Based on the rejection, should this act as a rejection? It should not. Anyway, if it hits my trailing stop loss, no problem with that. Look, yeah, it will hit or not, I don't care, but whatever it is, let's see. Like this is the fair value, I put my stop loss. There is no candle sign, nothing, just the fair value is above the fair value, okay. Anyway, what I was saying is, if it is a 50k account, your max drawdown is $2,000 on top step, okay, if I'm not wrong. So the approach you can take is, if you, okay, more than happy to see that, as the obvious liquidity it has provided, no problem with that, and by that I have made $400, okay. I didn't I didn't secure all of them, but it's okay. 2 lots here as a partial could have been a better choice, but I don't care anymore. Now market can go break above all these things and give me a new setup or something. Okay, let me actually keep that on for a while. So yeah, the max drawdown is $2,000. If you risk 1% per trade, okay, which is $500, how many trades can you lose in a row? That's only 4 trades. Now I prefer 1% for myself because I have been practicing this for like more than 2 years now. I have been doing these things for more than 2 years now, okay. I can do that because I have a strategy, or I have the data that says I will not lose 4 trades in a row. Even on my worst days, I will not lose 4 trades in a row. That my back testing, my forward testing, my all of my trading, those things are telling me that that never happened with me. If I lose one trade or two trades in a row, the third trade I will win. That's my result is telling me. If you don't have a result like that, in that case, you must have to reduce your risk, because you have to increase your entries or increase your chances. So that case you can risk like 0.5% per trade, and you are now getting 8 entries or 8 losing trades in a row to blow your account. Come on, I thought it will come back one more time here. It did not. Just a second. Just a second. It did not come back one more time, guys. It did not. I will explain in a second. Okay, now it's going too far high up there. So the craziness that I can see from the market is going until that high. Damn it, it didn't come back here. I was about to take a buy long on this fair value, but it is what it is, no problem. This is the moment. Tonight is the night. What the hell just happened? Okay, at least I got my entry at the place where I was willing to get. Okay, and I know it may go higher, but like it may go for those liquidities, but I would love to close it here because of the apex system. That's the most obvious. If I'm on the right side, and it's a huge candle, so this will be my sell stop. This is the moment. Tonight is the night. Yeah, so what I was saying is you can reduce your risk. Now about taking one entry per day, this is where you can work on the thing. Like if you are risking less, if you have more opportunities, first entry, if the silver bullet is still providing you something, you can take a second entry. Okay, like nothing wrong with that. You can take another entry if the silver bullet is providing. Okay, did I actually miss just the first fair value over there? Because I'm seeing this fair value as well. Anyway, market didn't even reach there, so let's see. And yeah, this propulsion block, that fair value, this fair value should hold if I'm right about my thing, but let's see what happens. And what I was saying is market can give you more opportunities during that silver bullet period. Now I trade London, as I said, like I'm just trying to figure out the New York sessions. Nothing like all of these trades or all of these entries, this is just for my learning curve, something like that. Okay, I'm using a funded challenge account just to be focused, nothing, like just to be focused on the chart. I really don't want to close two lots over there. Okay, like that's obvious level, close one, but I don't think market should respect this 15 minutes fair value. I closed not because of that high, because of this bearish 15 minutes fair value that market has provided. But since what is the time, 3 a.m. yeah, so since it's 3 a.m. market can easily go and go and go, and this is obvious level, but again the buy side makes more sense to me right now, if that is the case. Okay, go through that one. And now I don't need it anymore. Actually I need it, but I don't want to utilize that anymore. This candle needs to go through that, come back again on top of this, continue higher, things like that. Okay, anyway, so yeah, you can increase the amount of entries you can take as a maximum. So if you risk 0.5%, that will give you 8 entries of losing trades, okay, like consecutive losing trades, things like that. You can get that from there. And is it a good entry? Is it a good entry? I mean, it's hard, okay, it's hard to say. Why I'm saying this is because it has generated more liquidity on the sell side. On the other hand, market has respected that CE. It's giving me some displacement. I want to see that market is keeping a 15 minutes bullish fair value here, like this way. At the same time, if it can break above this fair value, I don't like, if market is willing to go higher and take the buy side, there are so many buy side that is pending, okay, like if not today, tomorrow, whenever, I don't care, like whatever it is, I'm expecting market will go through that, create another fair value on the 15 minutes chart, like here, okay. This will act as a 15 minutes breakaway gap, this specific gap, and that 15 minutes bearish breakaway gap will be broken and market will act like this gap should act as a inversion fair value. If that can happen, it's good. If not, then this, after taking this high, market will start to reverse, and from that's why I took a partial over here, because that's the fair value gap starting. So this fair value, if this candle can close above, I will expect a retracement, or maybe it will first take the liquidity, then retrace on this fair value, and then it will continue higher. That's what I'm expecting. And the first partial I put over here is just because of the 15 minutes, not because of that high, okay, like the 15 minutes bearish fair value. One more tick. No. Yep. Now market can do whatever it wants to do. This will be the trailing stop loss. Why? Because based on this candle's low will be the trailing stop loss, but that's my exact entry, and I love to keep a tick with me so that it can cover the trading cost as well. As I'm saying, market should keep this fair value as a breakaway gap on the 15 minutes chart, okay, like this. And I'm still keeping this on just to see the retracement. Usually I can move it around this level, but anyway, it is what it is. Let it go. I have secured some profit, I have secured the loss as well. I don't care if it can go and give me the other profit or not. And what I was saying is, I want to see it is creating another fair value around this area, okay, like a small, big, doesn't matter, another 15 minutes fair value around this area, so that if market is willing to go higher, that fair value will decide if it's willing to go higher or not. Like once it breaks above this, that is a good entry. This is not a good entry, okay. Like why I took this entry, because this is a perfect scalping opportunity. Market is going to, if it's coming to go, like if it's coming lower and going to fall, where is the obvious level that market can reach and then fall? This 15 minutes bearish fair value that market has created over here, okay, the only fair value. So scalping opportunity, yes, I missed it from this area, okay, like I wanted to enter from here. If I entered from here, the profit made more sense over there, okay, but I missed it. When market broke above and came to this fair value, that was the entry, like this black candle, okay, but I missed it over here. And then I was waiting to see the wick is coming inside of that area one more time, then going higher, but unfortunately that didn't happen. Just look again where the, see that wick, look where it stopped, okay. So this is where I was willing to take entry, but yes, since that was already like this was already happened, I was expecting it will come a little inside of that area, the common area, like this sort of area, and then it will go higher. So I was trying to take the entry from this. Instead it went there. Okay, now as I said, like this is the most obvious level from where market can start to go lower, but I need to see that this fair value is holding or breaking, like market is breaking below that fair value. If this fair value is holding, then market can still continue higher, no problem. But see, like it's not respecting this fair value anymore because it found resistance on a higher fair value over like higher time frame fair value. So as long as market is not closing below this, my stop loss is not on the optimal place. First of all, it has to be below this low, with this candle. But since that is my entry, I'm not willing to put it there. I'm happy with that 2 handle or whatever it is, that profit. It's not because of the profit I'm securing, it's because of the commission that it may take. I don't want to give them that commission from my winning trade, as simple as that. And the volume imbalance here, okay, like that is something that is holding the price, whatever it is. Partial, guys, that was the obvious level. Okay, the 2 lots I put here because of that 15 minutes. It's okay, I could have secured the full profit over there, but I don't care about that small things over the time. Please show MSS once the MSS for this bullish trade, liquidity market structure. Here, this above this side. And yes, so that 15 minutes fair value, even that was not created. So now these are the obvious levels for the market. I just took a retracement, like I know if it can go to that fair value, from here I want to see what market does. That's why my first take profit I put both of them at that level. Okay, I don't know if it's making sense to you guys or not, but based on these, okay, that was the most obvious level that market can reach with that move based on this 15 minutes bearish fair value. Now the displacement happening, yes, I could have looked for a sell short as well from that area, but I'm not that eager to like go buy, go sell, go buy, go sell, not like that. I have taken 2 entries, both of them gave me whatever, like $689.50 worth of profit. It showed me more, I didn't close because I wanted to see how far it can go. Okay, as simple as that. Took partial at the obvious level. Am I not profitable? I'm profitable. I'm not in a negative balance. So yeah, I mean, it is what it is. That's how I trade. I always close partial, then leave the rest. Whatever it wants to do, it can do. All the way back here. Real account. This is Apex. This is Apex. So in 2 days, $2,281.60 just by trading the New York PM session. All the way back. Okay. Now I'm not expecting market to go through this because it failed to create a fair value, but until it goes above this, you cannot take any more entry, nothing. Like the scalping, it's done over here. Okay, you cannot look for another buy from these areas because of that 15 minutes bearish fair value. If it goes above that, the same rule, you want to see it's breaking, like breaking above, rejection from 50%, again closing above the upper portion, tap, that is your entry until it reaches for the buy side liquidity. Okay, I really don't know why this happens on trading view. So yeah, I mean, it is what it is. Juicy. I can see like it's most probably this, all these liquidities will be taken now, because that is very strong on the sell side right now. By the meantime, I haven't actually looked into the ES. Okay, ES has traded into that as well. ES has created more equals on the lower side. And it has only this, a small little breakaway gap over there, this one. Okay, by the way guys, if you are not even using any plan, you can still have two charts in one window. Okay, if you don't know, let me show you how you can do that. So let me close one chart from my current plan. So when you have like, let me close all of them. Okay, so you will have a chart like this. You cannot select this sort of plans or something, but you can have another chart on the low. How? If you see this plus, this says compare or add symbol. When you click here, you see yes. When you put your mouse over there, or whatever you are willing to see, just after the explanation you will understand. Okay, like here, same scale will give you inside of this, new price scale will give you above maybe, but new pen will give you below. Okay, if you hover your mouse, see the new pen, if you click, see it's giving me another one. So you can have multiple, maybe DXY new pen. Okay, this is DXY. In one screen you have three. Now when this happens, either you can double click this one, or you can go to the settings from here. Okay, if you go to this settings, style, instead of line, go to candles, same thing, settings, style, instead of line, candles. So now you have DXY, you have ES, you have NQ. This is how you can put all of them together in one chart without having a plan. Now if you keep the ES and DXY here, and if you have a plan, or if you even don't have a plan, another thing is you can open another tab, go whatever price or chart you are willing to see. From that, separate or detach, hold the Windows key, left arrow will shift the chart on the left, right arrow will shift the chart on the right. Now on the same screen you have the opportunity to put 4 different charts. Okay, you will trade on this chart, you will keep the other chart there. So this is how you can utilize your multi-screen or bigger screen without even having the plans, trading plans. Okay, like this sort of things. Okay, and now if I do like this, I have now 4 or 5 charts in my one single chart. Okay, that's how it works. Now the downside of it is like having it at the low or bottom is whatever time frame you are selecting here, it will show that time frame. Whatever time frame you are selecting on your other screen, it will show that time frame. That's the only downside. For example, I have plan, I have splitted my screen, I can have a 15 minutes on the left, I can have a 1 minute on the right. But if you don't have plan and you are using only one screen like this, whatever time frame you will select there, the lower one will show the exact same time frame. It will not show you different time frame. But as I said, if you split, you can still utilize that as well, multi time frame or something. Okay, so that can be a good tips or idea to utilize. That area is still holding, man. It's okay. you cannot catch every single move, but by the meantime what I'm seeing is a thanks a lot for subscribing to the channel. Welcome. See the OTZ, that was the OTZ fair value that market tap, but I don't know, like for taking a entry like this bearish fair value is a very big problem. Okay, I cannot, when I have a bearish fair value above from where market is rejecting, I cannot look for a long setup on this retracement, because remember how the market works. See from here. Hey, thanks a lot for subscribing. Welcome to the channel. Expansion, from expansion it has two things. Oh, what's happening? I'm booming. Welcome everyone. Retracement or reversal. Oh yeah, beautiful. Okay, now I don't know, like forgive my handwriting with my mouse, but what happens is when market starts every day or every session starts with something like starts means after every expansion or after every move you will see some consolidation, things like that. Every day starts with a consolidation. This is your Asia session, Asia opening, things like that. Look at the Asia session today. This is the Asia session. Okay, consolidation. After consolidation market goes for a expansion. From expansion market can do multiple things, but mostly from expansion you will see either a consolidation or a retracement. Expansion happened, retracement happened. From the retracement market can again go for a expansion, so market can again go for a expansion or a reversal. So the retracement can cause a reversal as well. After that market will again go to consolidation. What, let's say market will reverse, take the liquidity, you will see market is consolidating here every time. Like that's one way, that's the straightforward way of market. Now another thing can happen, like what do I mean by straightforward way? Let's draw something on the chart, and I hope this, okay, I will draw with it. So market will start with consolidation, market will do a expansion, from there it can do a retracement, and then from the retracement either another expansion or a reversal. So expansion will work like this way or reversal will work like this way. So let me change the color for this one. Okay, so that will be the easiest way. After the expansion or reversal or whatever it is market has done, it will again go for consolidation, it will again go for consolidation. Okay, so from there it will again go for an expansion, again for retracement or reversal, again expansion, consolidation, things like that. This is the easier way of market. Okay, this is the I am trying to draw a little more. Okay, so this is the easier way of market or the straightforward way. Now there can be another way or another phase in the market which will give you something like, I'm drawing with this because the other, like when I draw with this and finish the drawing, it will do something like this. Okay, right after that I don't know what exactly is happening regarding that thing, but that's why I'm not drawing with that tool is broken for me. Another way for the market is, market will start with consolidation, it will expand, it will consolidate, it will expand, it will consolidate, it will expand, and then maybe a retracement or a reversal, things like that. Okay, what market will never do is from a consolidation, from a consolidation it will never go for a reversal, or like whichever way, it will never go for a reversal. That will never happen. First it will expand, then either a retracement that can cause a reversal. So consolidation, after the consolidation you will always expect a expansion that will never cause a reversal. Now this thing or this concept gives us another thing. On my channel I have shared, since I have some new subscribers or new viewers on my channel, you will see the dealing range video type 1 and type 2. In that video, this is accumulation, manipulation. The first expansion is manipulation. From there market has again reaccumulation, remanipulation, reaccumulation, remanipulation. After this thing we expect a reversal or distribution. This is called distribution until this sell side is taken. So the buy side was taken around this high, sell side is taken here. From here this is a retracement that caused a reversal, right? From this reversal market will go. So think about this way: consolidation, expansion, consolidation, expansion. From expansion it can come back to consolidation and again it will go for expansion. It consolidated, again went for expansion, again expansion, it can come back to consolidation, then another expansion, consolidation, expansion. From here, see, it's in the expansion phase. From here what we are expecting? A retracement. Retracement is happening, but during this retracement, if it's a reversal, you will not see another consolidation, because from retracement it can either reverse or expand. It will never give you another consolidation during the retracement. When retracement happens, if it's a reversal, you will see the sell side is taken. After the sell side is taken, in the reversal it can either go for consolidation, or if it's a dealing range it will go for another retracement, like this way. So from here it will go for a retracement to the equilibrium or the premium. Since I'm showing you a sell short model, it will go inside of that premium area. There will be your fair value gaps and other stuff. Market will raise the fair value gap even on the higher time frame. Mostly you look for this sort of things on the higher time frame and draw the fair value gaps in the higher time frame, and one lower time frame you want to see inside of that higher time frame fair value gap. I'm just making it bit bigger so that I can draw properly. Here what market will do is it will give you something like this, okay, a M setup. This is the liquidity graph market structure shift you want to keep your eye on. When market will create multiple fair values or one single fair value at the market structure shift, that is where you will enter and target what? The sell side liquidity that market just created, and if there is more below that level, you can take some partial here and hold the rest for that area. That's one way of dealing range. Now this M setup, some people miss it because of the M. They are always expecting like a perfect like this, okay, like lower high, higher high, liquidity graph, market structure shift. It doesn't necessarily need to be like that way. It can be like this as well, okay. This is also looking like M, isn't it? Like, okay, I cannot, it's on minute, so it will not allow me to go any left. Sorry. So this is a M, this is a M. If this happens, that low is valid for shifting your market structure, and if this happened, this is a beta, like this is the textbook setup. This is also a textbook setup, but in this case you have to consider that as your. Why I'm saying this is because at this area either you will have a order block or a rejection block or a fair value for that reason market failed to go above that high. Okay, so that is already a bullish PDRA bearish PDRA respect, and market is going lower, breaking below a previous low, creating new lower low, something like this. So that's why this is a market structure shift. Same way, market took the liquidity inside of a higher time frame point of interest, it broke below the low, it created a lower low. So that is a something like this. Okay, it has done that. So this market structure shift is where you are looking for your fair value gaps or whatever OTZ. See, like the OTZ retest, what I said over here. Look, but why I did not consider going for a long from here when I saw it's holding the price, and not just that. Okay, like let me just show you especially this part. Okay, that's the fair value. Look, it left some portion open, middle point perfect respect, market is going higher, but still why I didn't consider taking another buy? The reason is I have a very big resistance over here. This is a 15 minutes bearish fair value. Okay, I have messed up my chart, so let me clear this first. Why this Colaberry? I don't want to like remove the points I marked because this is the chart I trade on, and that's why I usually, when I live stream, I come to the NQH so that I can do whatever I want to do. Okay, so yeah, let me show you this specific area. On this NQH, you have a bearish fair value gap of this entire move. Okay, that can send the price lower. That's why this is where I actually took my sell short, first partial. Okay, first I put both of my position here. I was expecting a fair value around this area, that's why I moved another one until that far, because there is your first fair value of the entire move. See, and market left the portion open. What did I said? Like either the first quadrant or the first half will send the price lower. If that's not happening, nobody can close above middle point. This is how, like, build up step by step. The next retracement was on the lower portion, markets came lower, took the liquidity. This fair value or even this fair value, whatever you are using, its target is fulfilled. This is the low that a market should take. Okay, its target, like immediate target of this fair value is that low, not this, not anything on the left, not this, not this. Why? Because again, when I will draw, it will move the thing, but see this high low, when market traded there, this is the low that market created, or this is where people started going for longs. Okay, so people who entered long here, their liquidity is the target. Market from here retraced below that. Now if it will continue more or not, how we can determine? Yesterday I said that I showed you those things, but today as well, if market wants to continue lower, it will create fair value right around this area, right at this area. Okay, like either here or at the body of those candles at this area, it will create another, like within this range you will find another bearish fair value gap, from where market will like barely tap into that and then continue lower. That's the sign of continuation. Every time market failed to do that, look here, when this liquidity was grabbed, even at this body level, there is no fair value, there is no fair value. See, around this area there is no fair value, market came lower. When this liquidity is grabbed, there is no fair value here. As you can see, like I don't even need to draw the body line as well. There is no fair value, market went higher. Same thing, when this liquidity was grabbed, market is failing to displace lower, it's going higher. So what I'm waiting for is, if market can break above this, that is when I will consider looking for another buy. Yes, I know, like if I just considered that entry that I was talking about, okay, like if I considered this setup, liquidity grab, market structure shift, fair value or OTZ, whatever you are using, since you know already, I think that I love to see the OTZ for a proper, this is the fair value that's sitting inside of my OTZ, and that is also the entry gap as well, because this should act as a breakaway gap. So this is the bag and this is the FVG. From here I can look into a entry until that one, okay, this is the high that market left before coming to this fair value. Now what I want to see is market when taking this liquidity, same thing, it's creating a fair value and displacing higher. That displacement will make me like more confident about the higher run for those sort of liquidities. Every time it's doing that, I'm happy to hold my trade. Every time it's failing to do that, look, in 1 minute it failed to do the same thing here, it failed to do the same thing here. When market was going higher, it failed to do the same thing above that high. There is no fair value around that area. When that high failed, market came lower, took the sell side one more time. When that failed, market went higher, market created multiple fair values, but mostly as I said, like I look into the left, and this last bullish fair value, bearish fair value, when that was disrespected last time, at that level, okay, look on this area, you have a fair value here, and below that level, yes, this one is not aligning perfectly because it's a 1 minute, okay, so you cannot expect everything to be picture perfect, but you have two fair values, you have another fair value right at that level, see, like this fair value as well. So this is indicating that market is willing to, so if you didn't take entry here, that fair value, what did I said, like it will just tap and go towards the liquidity. That was the liquidity because of this 15 minutes bearish fair value. If it was not here, this move could have sent the price until that high, or even this first fair value that I'm looking into. So I could have hold my trade until that far if the 15 minute was not there. That's why first entry I put my take profit over here, but just because it's a live stream, as I'm saying over and over again, okay, so like if it is not live stream, I would love to close the position here. It's a sheer short money, okay, why should I not take that profit? I don't care about it is a small range, it is a small this, it is this, that, no, because market, look on the 15 minutes on this chart, okay, when this move was happening, this is the only fair value it has created. When these green candles were happening, that gave me this liquidity market structure shift. That move can only be stopped by this fair value. There is nothing that can stop, even nothing here, okay, and up until that high, even this fair value, if you look into, see that high, so you can expect it will go until that far, so you don't even need to target exact that, you can expect that, because this fair value, the quadrant theory, as simple as that, the first quadrant, second quadrant, this way. So since that is sitting at the middle point, I'm expecting it will go to the upper quadrant as well. That's where it went. Now market still did not take the liquidity, expansion, accumulation, expansion, accumulation, or consolidation, everything happening in that cycle. I want to see when these two fair values, like these two buy side liquidities are taken, market is expanding, yeah, like it is closing above, expanding higher, and keeping that fair value at that level, okay. If that happens, I don't even need to wait for this fair value to be broken. If it fails the way it is failing, if it fails to keep that fair value, now I must have to wait until that is broken. Still it has kept the fair value in between the range, so that is a good sign. Last fair value concept, Anyway, let's see. That's the thing, like even though it was here, this entry is not a very high probability entry for me, not anymore. Okay, because I have very close relative equal lows sitting right here. Just if I just mark the swing lows on the 15 minutes, that's one low, this is one low, that's one low, this is one low. There is nothing here, like no fair value, nothing that can send the market higher. We know like there is order block, breaker block, things like that, but what I'm saying is the fair value. Okay, so this area market can easily retrace, come into the fair value that previously sent the market higher, and the breakaway gap that was never revisited or retested. So this time market can even come inside of this. So that's the only reason even though this is a very good setup, clean setup, it took that liquidity, delivered perfectly, everything happened, still I'm not willing to take this entry anymore. The first entry was because of that, like revisit to that area and take the profit at that clean swing high. That was okay for me because I know market, if it's on to reverse, this is the area from where it can reverse, and that is where it started reversing. Now as I'm saying, like this is the entry I would love to avoid because of that thing. It's 1.77 R, it's 27 handle, so many things. Okay, so many. I'm not willing to take that entry anymore until it breaks above that. Once it breaks above, this is a more like higher probability. Okay, this is a higher probability because the bearish higher time frame PDRA is failing to hold the price, so that will be a higher probability. When market will go take this liquidity, if it can go and close above that, break above that, this from this area to this area, that is 16.5 and 75, around 17 handle, because it was not exactly on the top. So around 17 handle, I'm happy to take that 17 handle instead of this 27 handle. I know it has cleared liquidity, clean market structure shift, fair value gap, retest done, went higher, took that, and what did I say? This fair value, this is its target, not that high. The way it is closing, that will determine, or that will say that if market is continuing higher or if it wants to retrace deeper. Okay, this is a deep retracement. Also, how you can be so sure that from here market will go to that buy side when it on its way down, it's coming out of a 15 minutes bearish fair value? Do you use macro? No, only mini. Oh, I got it. Macro, I don't use macro, my friend. Why I don't use macro is because ICT said, like I use, not use at all, not like that, but very rarely. Okay, let me in my channel it will be easier to find, that's why I'm coming in my channel. Okay, so macro versus order block, listen to this carefully. I will try to, like, for everyone, this message is for everyone because it will help you a lot. Okay, listen. Okay, I'll just mute myself so that it doesn't make any echo or noise. And okay,
all of this is occurring, by the way, in the 1150 to 1210 macro. Okay, it's a specific sweet period of time where the algorithm will start spooling, reaching for liquidity. You have to understand narrative. Okay, don't listen to these guys out there that have 1150 or 1210, or maybe my 1050 to 1110 macro times, and they're trying to show you that they're doing something. None of you know what you're talking about. If you're talking about macros, you have no idea what you're doing, stop spreading misinformation. Okay. I'm not trying to be mean to you. I'm not trying to be rude. Okay. But you literally don't know what you're talking about. But this leg here, that's the 8.
Okay. So I hope the audio is clear over there. I don't know like how loud it was during the stream, but ICT said, if you are talking about macro, stop spreading this news. None of you know what you are talking about. Okay. So when he strictly said things like that, even if I'm using or utilizing it to try it out, I'm not uh, like I'm not going to show or teach macro. Now there is a controversy regarding order block as well. In this same video I have shared that one as well. Listen to the order block thing. Okay, like now I have like 16-17 people at the moment watching, so I think you guys can give me the feedback or what I understood, if it is right or if I'm wrong regarding that. Okay, so I will mute myself one more time and I will give you the message about order block. Know what macro, I heard the message about macro. Now let's hear the message about order block.
It's not, listen to me, folks. It's not what these folks are taking from my videos and writing books on Amazon. Completely wrong. And there's a lot of things I'm going to keep from even my private mentorship group about order block theory until my books are released. Okay, and I've purposely held that back. Why is he holding back everything? You know, it's because I have 4 books coming. One's a fiction, and 3 are technical.
So he said it's not completely wrong. Okay, he didn't say it's not like they are completely wrong about things like that. Okay, about order block or something. He said it's not completely wrong. Listen again what he had to say.
It's not, listen to me, folks. It's not what these folks are taking from my videos and writing books on Amazon. Completely wrong. And there's a lot of things I'm going to keep.
You understand what? So I don't know, guys. Like, is it complete? Like, did I understood it wrong or did I heard it right? Like, ICT said the order block thing, that is not completely wrong, but there are a lot of things that he is keeping for his books. He is not delivering that. See what's happening right here? Liquidity grab, market structure shift, fair value, market is coming lower. This is a sell shot that you would like to take until that low, not the entire low. You can hold or you can, okay, why is it continuously drawing that line anyway? So not until this or that, you can hold some position based on the same thing. It failed to displace above. See, like now it's coming lower. Same thing, guys. Failed to displace, went higher. Failed to displace, coming lower. Failed to displace, came lower. It's the same thing. Okay. Mikhail brother, good evening my brother. I hope you're well and everyone in chat is well. Yep. So I took 2 scalping entries. Okay, now I had pretty good amount of profit, and as you know, I don't take all the profits that I get. So end of the moment from 2 trades, both of them provided me little partial that gave me $690 here. But before that, at the very beginning of the stream, I took 2 trades, like even before the stream started, I took 2 trades on my funded account, and there I have made around 1670 or 80, something like that. I already showed to you all during the stream, so whoever joined later, they can actually watch the first part, like at the very beginning of the stream, where I have discussed about that one. Okay, so the first entry I took, if I'm not wrong, this was the level. Yeah, so from here stop loss was right here. This was the entry, that was the stop loss. Target was this low because that's the most obvious, so not exactly that low, a tick below that I closed, and there was this thing. Okay, this last bullish fair value that was sending price higher multiple times. So as a result, I didn't even look into these lows, yeah, I had one partial that I take like put until that, but in a profit, like when I trailed my stop loss around this area, 3 lots of entry I closed to right here, and the other lot stopped me out here. The moment it stopped me out, the very next moment I took another buy from here until here, okay, like from that last fair value. From here, this is the most obvious, so I this time I took 2 lots, closed one partial right at this area, moved my stop loss to break even, and closed another partial around this or something. I showed in the stream, I forgot, but wherever it is, somewhat around this area was where I closed the other partial. So 2 entries on the funded account, both of them profitable, both of them gave me around 1600 something. 2 entries here based on the same concept, the last fair value. So the first entry I took from here, maybe I'm not sure, like this was the area where I took the first entry, maybe. If that is the case, yeah, so this was the entry, stop loss was somewhat around this area, if I'm not saying it wrong, and took some partial, left the rest runner, but it stopped me out in a small profit or something, okay, or I don't remember, or this was the level where I entered. I really don't remember where I entered, but whatever it is, both of them gave me pretty good result, okay. If I just targeted the obvious level, yeah, the profit could have been now $1000 or something, but it is what it is, I don't care. I don't care. Okay, so now about the macro and the order block. If you heard ICT, like if you heard the message from ICT correctly, and if I'm understanding it correctly, then do not talk about macro at all. Talk about order block, because order block, the people or the folks they are talking about order block are not completely wrong, okay. So if I haven't misunderstood that message, then this is why I talk about order block, I don't talk about macro. Simple. And yeah, I have set rules for my order blocks as well. I just don't count every single up close or down close candle as my order block. To become a order block, for example, okay, this is a order block. It's coming out of a higher time frame point of interest. When market closed below that level, I want to see either that move is creating a fair value like below that level or inside of that level, okay, inside of those order blocks. This is the fair value it has created, so this fair value became a strong fair value, okay. I don't know if you are understanding this part or not. So these 2 candles are my order block when market closed below that. When that happened, order block is confirmed. Now I look into the extreme order block. So next time if market is going higher from this fair value, I will look into that mean threshold, how market is respecting, or even the lower portion of the order block, how market is reacting or respecting that level. And based on the same logic that I just said, this was the only fair value of this bullish move that took the liquidity, and market didn't even look here, guys. That black candle, that high, cleared even this candle's buy side liquidity. So when market tapped here, it kept some portion open, it broke below that. This was the last fair value from this swing low to that swing high, like the only fair value. Broke below that, that was the entry. This was the stop loss, okay, stop loss here. So if you can utilize this thing, stop using just the bullish ones, look into these things as well. I have a bearish fair value aligning with a bullish fair value. I have order block, I have liquidity graph, market structure shift, high, low, higher high. I have breaker block over there. So this entry was a better entry. Now week to week, yes, it's a huge range, that's why we mostly look into the last candle, but in this case this last candle is a very small body and huge wick, So what I can do is I can just look into the bodies, okay, like this. Now look at that breaker block mean threshold, how market has respected that area perfectly. That is a high probability because I have so many levels of defense over there. Once I took that entry, let's think this way, okay, like I didn't take the entry, but once I took the entry, market came until where the fair value that was responsible for market to send higher until that far. This is a 5.47R. This is the entry I would love to take. I'm not taking this entry when I have a bearish resistance sitting right above me. Here it is aligning with that bearish resistance. That's why this entry was a better entry. Okay, I don't even need to hold until that far, even the sell side, this sell side. As long as I'm making the money, I'm happy with that. I really don't need to hold it for all the way to the sell side liquidity here and here. That's a wrong concept. If you are trying to do it like that way, stop doing it. Stop doing it. Have something in your mind, a target, something that can satisfy your ego, that okay, today I have made $500, I'm happy with $500. Then close the bloody chart, go to bed or go wherever you want to go, like just do whatever you want to do. Once you are done with that, once you are happy with that, you will blow your account by trying to make this 500 to 5000 or 50k if you don't look into your profits like that way. Think this way, okay, what did I said, like this low will be a most obvious low, and also based on how it breaks below this one, I will consider if I want to take another trade or not. So let's see how market reacts, and look at this high. Do you have anything here? This retracement happened. Do you have anything here from this swing low, this high or that high, this fair value gap? Where did market retrace? Is there anything here that can send the market lower? Nothing. It came until that far, almost it has taken that liquidity. Now as I said, when there is a wick sitting like that way, I would try to go with the body, like I would love to take my profit here rather than going all the way low. Now this move can go lower, I don't care about that. When I'm going for the wick, this is where I'm going for the wick. Why? On the 15 minutes chart, that high, this high is actually that candle's high, okay, this candle's wick. Where is the fair value? Above that level. So market has to go a tick above that to grab that liquidity. That's why, like, not liquidity, to rebalance the imbalance around this area, at least a tick above. That's why this high I can target that. I don't need to target this because I'm expecting market will go inside of that fair value, 15 minutes bearish fair value. Let me remove some of the lines, it might make sense after that. See, that liquidity is taken. This is the target for that specific fair value or that specific PDRA. After that, how it's continuing lower gonna decide everything from here, okay, that it wants to go for this or these, or even like more liquidity on the 15 minutes time frame that I have drawn below those areas. If it wants to continue there or not, that gonna decide what happening right here. Simple. You don't always need to go for all the way, okay, the bigger moves, bigger runs. Now there is a thing that I believe and I'm trying to implement for myself. See the displacement, it is trying to continue lower. This is where I'm expecting market will go lower and take all these liquidities if it can continue, okay. Like see, it still didn't close below that first fair value. I first need to see that. Same concept. Market has taken liquidity, given you market structure shift. This whole area is my order block because it has two fair values inside of that. It has fair value right above that as well. This is my order block, but should I look into a trade from that high? I'm not willing to do that. This last candle is the extreme thing. I can look into a trade from this candle. That's the extreme order block. Now for us, we mostly look into the body of the candle. So this is where the order block we write. Market tapped there. Now market can go higher, market can do whatever it wants to do. If it is willing to continue lower, that displacement didn't happen over here. So until I see it's breaking below this level, like this fair value and this order block mean threshold, I cannot consider any sell short anymore, because market has provided that it's finding resistance over here. And why it's finding resistance on the 15 minutes time frame, since I'm on a wrong chart, like different chart over here, look at these areas, okay, like this specific area. This can act as a what it calls a rejection block, this area. Why? When market took the liquidity, started going higher on the upper side, what happened here? Liquidity grab, market structure shift happened so many other places, but especially that this area can hold the price, send the price higher. It has that power. When first time it came, it went higher. Second time it came, it went higher. Third time it came, it went higher. Body can close inside of that. This liquidity should not be taken. That's the thing. If market is willing to like respect this area as a rejection block and go higher from here, so market will do one thing. It will respect this area, it will go higher, take all these liquidities, and if it wants to continue higher, same thing. If it can displace above this high, this high, this high, every high, okay, you have to look into every high. You don't know after taking this sell side if it will continue, this buy side, if it will continue going lower or not. One more time. So every high, nearest one is the most obvious, not relative equal, not equal, not this, nothing. Nearest one, the first one, the retracement one, this is your most obvious level. Once this one is taken, if market can displace above that area, create new fair value around that area, you can expect market will continue from that fair value. That's when this is your next most obvious. When that is taken, same thing you want to see, that it is creating fair value around that area. From here it can continue. This way you will build a step by step. This is like a staircase. Think about this way. You are going higher like this, okay? This is like a staircase towards the moon, okay? You cannot just go higher from this stair, okay? You cannot step here and reach there. You cannot do that. Market will do something or give you something that will decide that yes, I want to continue even higher. If that does not happen, this is still a bearish fair value that's holding the price. So what you want to do? You want to look into this stair, that how market is going above that stair. Once this high is taken, what it will do around that area, it will create another fair value. So then you can utilize this one or that fair value to enter into a long trade for that high. Same way, okay, same way. See at this last fair value that market disrespected, market came here, continued lower, took the sell side. Again market, just look at the body, where the body closed inside of that. Yes, wick went past a little, it revisited that order block area. Whatever it is, I don't care about the wicks. As long as the body is closing above, I'm happy. Same thing around this high, it failed to displace and create new fair value. When that happened, what happened? Market crushed lower. It took all this retracement low, all these low, until this far it has crushed lower. So you have to look into the chart in a different manner. You just can't like enter into a trade and wait until it goes here or here. That's not how you will make the money, because you don't have the power, or I don't have the power, or no one like us have the power who can send market from one place to another. People who have the power, they are controlling the market. You are just trying to ride with them, and how far you will ride, it will determine, like the price will determine that. Okay, it went above that, it created a fair value around that area or a displacement. Fair value, how a fair value forms? Why here you cannot see fair values, okay? And why in this move you can see multiple fair values? Because this is what the displacement looks like. When market took that equal high, look at this, okay? Just from there it immediately created a fair value. So from here, that is its next target. Here it failed, market came lower. Again here it failed, market came lower, took that liquidity. So if you think, okay, this trade will go until that far because there is equals, you are wrong. You cannot hold trade like that. Will work maybe like 10% of the time, and 90% of the time you will see something like this. All the profit you saw, it will be disregarded every time. Like whenever I, even this $600 I mentioned, right, that this is where I should close, or this is where I should, even my second entry that I took a partial here, I put all my profit here, like all my position exit point right here, but I took a partial, I moved it there. Why? And the stop loss in break even or little profit as well. So why I did that? Just because I'm streaming. If I'm not streaming, what you saw at the very first moment I did, that is what I would do every time with my account. Once, because this is the resistance, I will take this profit. Now market went higher, closed above that 15 minutes fair value. I know how to use this fair value. I will enter again from that area for that run. I'm not losing anything, but by closing or taking that profit, I'm out of all this nonsense. Okay, I'm out of all this nonsense. See, like from here, the order block, what did I say? Market can retrace. Now this is the immediate swing high. So think this way, just scalping. If you have done that, this is 17.75 handles. That's like for even one lot, this is more than how much, like $380 or something. Aren't you happy with that? Go work somewhere, earn that $375. You will understand what you are dealing with. There are a lot of people who doesn't even earn $300-400 in a week. There are a lot of people like that. Okay, so you cannot hold your trade thinking that market, okay, by the time I was doing all this, okay, no, it didn't retrace to that far. Look at this times move. Okay, when that low was taken, immediately it continued, it's creating more fair value. This is a indication when this low is getting violated or taken. If it can create another fair value around this area, that fair value can be an area where I can look into another trade. But as I'm saying, like I actually missed, I'm looking into, yeah, I missed it. I missed this to this. Okay, how much I missed? Why I'm saying this to this? This is 8.75 handle, no problem with that. Okay, no problem with that. Why I said I missed is because that candle closed, I had a wrong fair value drawn over there. Like I didn't realize that I'm looking into a different chart than this one. Okay, see, the same thing is happening again and again. It failed here, market, the same candle, immediate next candle started going high. Now when can I look into a buy long? It's a huge candle displacement. When can I look into a buy long? After this liquidity. First thing first, this liquidity has created more liquidity with the lower one, so you cannot look into buy long straight away. It can still continue lower. It has created a huge fair value. This fair value, I want to see that the 50% is the maximum level market can reach. The 50%. I don't even need this one anymore. I know that is a good area to look for because it showed so much resistance over there. Even this one. But I actually missed that part to this part. Closed below, tapped into the lower portion. It straight away came to this liquidity. That's how, like, scalping, you use this information, it will help you, and target only the most obvious, the nearest one. This is the nearest one because this liquidity was already taken. So market from here, now again look that fair value how beautifully is holding, and market is going lower. Hey, what's up, bro? Why you are saying oi ball? Why oi ball? Hmm? Hmm? I want to see a fair value at that level from this move. If that can happen, that can be a possible entry for the continuation, my friend. Come on, give me another fair value here. Yep. Yes, utilize this, guys, not that, because it's a huge fair value. How far it can go, you don't know, but this fair value, come on, not too far, at least do that so that I can take a sell short. And how far have you reached here? This was the 1 minute big fair value or what? I don't know why it has changed by a lot. No, I'm still looking here. Okay, all these liquidities, how many levels it has cleared so far. Brother, please, how do you trade candle 16-2? So you're talking about this one, you're talking about this candle, yeah, Stephen? Because yeah, I have like AMPM set to this area. Okay, this fair value, if market can ever come back, this is where I would love to take another entry, a stop loss at that level, because that's the most obvious. Target can be 57.75. if that is, where is that? Okay, that is actually giving me, just a second, brother, let's see. I don't think it will come back there. If this candle can close little higher. Now see, look at the difference between the continuation. Okay, that low actually decided, this low did not decided yet, this low decided. Now I'm expecting market will come until that, give me a entry and then continue lower. If that doesn't happen, then I missed my opportunity. Okay, Stephen, about this one, brother, when this is the lowest low that you can see on your chart, this is the last fair value. I don't combine this. Okay, are you talking about this one? Hold on, 16:02, so 4 p.m. and 4 p.m. and 2 minutes candle, this, yeah, so that's what I'm talking about, this fair value and this candle. How you can trade this? You can trade this by looking into this fair value. When market broke below and closed below that, the very next moment you have to be quick regarding this. Okay, like it can happen like that or it can happen like this, whatever it is, this is your entry, targeting just the nearest. If market is willing to go lower, you will see fair value at that level. Okay, once that fair value is created, you can hold your trade until all other liquidities, yeah, like this 940 I will not get. Okay, it would look something like this. Now here your stop loss, you cannot go all the way back up there. Usually that is where I would love to put the stop loss, but in this case it's a huge fair value gap. So in this case I will go like this way, because I believe that 50% should not be traded, and it just traded the lower, little bit lower lower quadrant. Target, first target should be that low, sorry, wherever the low is, this low, you can take some partial. I look into the amount, I don't look into the risk to reward straight away for this specific thing. The most obvious is this, market has taken that, this is where you are exiting. Now it's a huge fair value or huge candle. I don't really, that's the reason you should not take this big of a fair value gaps entry. Okay, like if it's a huge let's say you are entering based on the fair value. Okay, you have first fair value, second fair value. Where is your stop loss? Here, the third candle. This is 22 handle. If you want to do that, you can do that, but how do you know that after taking this liquidity, market will not go higher and reverse? Do you know that? You don't know that. When will you know that? Is when market is creating fair value or displacing below those levels. That fair value or that liquidity level that you can see from this low, it has created fair value exactly on that level. Even when that low happened here, fair value. So it will continue for the next level. Where is the next level? Here. Market has taken that liquidity already. Is it displacing below or creating new fair value here? I cannot see a displacement or new fair. Okay, I cannot see a displacement or new fair value yet on this level. So even if I take this entry, this is not a very good entry for me, but just because based on what market did, I'm expecting market can continue lower until that extreme fair value. That's why I placed that entry. So same thing. Okay, Stephen, yesterday as well I utilized that, today as well. I will show you what I mean. This was the last fair value. Market broke below, you can take the entry here, but what is your target? The nearest one. Where is, I took this entry. Okay, like literally I took this entry even from this area, because that move had this fair value as the last fair value. When it closed below, I took the entry, a stop loss here. I think that was the entry, or maybe this was the entry. Yeah, I think this was the entry. So when market closed below that, you can enter from here, a stop loss there. Okay, this low is the most obvious low for your target. Here is your last fair value, closed below that. I'm showing for the scalping. Okay, don't judge someone if you don't know what you are talking about. I know what I'm talking about. My result is showing that this was the stop loss and this was the optimal target. Okay, it's 12 handles, no problem, but that is a, like literally that is a guaranteed 12 handle for me. Okay, so far as many time as I showed from here to here, did it provided that? Easily provided that. Just looking into those things. Now this entry, it's taking too long for price to come back there and continue lower. It's failing to continue lower, and this is a 15 minutes bullish fair value as well. I don't think I should be entering into this trade, but based on the, you see, like look into this expansion, then little bit of consolidation around here, right? The bodies are giving you some consolidation. Again it's expanding lower. So expansion, consolidation, expansion happening. So I'm expecting this consolidation. It's still indicating that, yeah, after this consolidation, market will come to this fair value or even to that fair value, and then it can go lower. And there was a 1 minute huge fair value that, okay, it was completely filled, so the fair value I really don't want to utilize anymore, but just for the sake. Okay, darn it. If I see that, I would consider entering from this one more time here. Like it has already taken the liquidity, this retracement I didn't consider anymore, but below that, this is the fair value. Market can retest and continue lower. I'm keeping that entry for a moment. If I hit my stop loss, okay, how it will hit my stop loss? It will close above this fair value, so I will consider entering above that. Okay, Sumon, why you are calling Sumon? I don't 75k. What is it? Real account 100k. Oh, okay, I have already showed what I mean by okay, I will rewatch it. Okay, if you are still here, I hope you will find some valuable information. Murad is calling you. Shumon. Hey Shumon. Guys, listen, I have a complaint to you all, okay? When there is a new member came in our family, for last 1 week, no one even gave me a single call to ask me how I'm doing or something like that. So I was the youngest one in my family, and now there is a younger one in terms of my niece, and my parents became grandparents. Now they all forgot about me. No one called me in a week. That never happened. Okay, my mother used to call me every single day. How bad is that, bro? Now I'm rejected already. So you guys can reject me as well. Like I'm already rejected from my family members. You guys can reject me. Oh, darn it. Okay, I'm completely rejected, bro. Oh, life, this is life. When something gets old, the only place of that thing is the dustbin, okay? Or in the storage corner of a storage room or something. Ah, this. I have no reference on that area, okay? So I don't really know where exactly it retraced and reversing from. It doesn't. No, there is nothing here. Oh, it came very close to my take profit level, bro. But it didn't give me the entry. I should have entered when it was nearly like at the close proximity. This is the closest it reached over there. But it's okay. It is what it is. I'm happy to let it go. Okay. I know it's a big move. I know it has. Okay. Come on. Leave that level. Okay. Leave that level. 6400 level. 6400. Leave that for a second, please. If it can give me entry here, I'm still willing to take the entry. I don't know if it is a good choice or not, but if it can give, okay, the volume imbalance can cause a big huge problem. Let's see why I will explain later. Now I'm taking only $270 risk since it's not reaching up for that point. This is a sell side liquidity, and I have another sell side liquidity at 57.75. okay, that's where I actually put my take profit. So these are the levels, and price currently is creating relative equal lows over there. So that's the only, okay, I'm not gonna get the entry here as well because doesn't look like that. I was willing to see that this sell side is still intact and market is going to give me the entry so that the relative equal can make sense, but it is what it is. Let's see if I can get it or not. And yeah, so I'm not gonna get the entry anymore. That's what I'm thinking. I don't know, like, let's see. It's a, so what, there is the liquidity 1 to 2 is what I would consider like this. Okay, if I get the entry, this is what I would consider, and stop loss doesn't even need to be there. It can be here as well. No, so I can remove this since it is already tapped by a tick. This candle can only be the candle that can give me entry. and now I'm afraid of this volume imbalance. Bonk gave a nice push, bro. Bonk is a bonk, brother. I love the names of crypto. Bonk, Shiba, Doge. When the Doge came out, the bloody name kept me away from that coin. Okay, just because of the name. Doge. Ripple. Cardano. That became ADA. Okay, then there was Pele. There was what was that? What was that? I forgot the name. Like there was something more funnier. Oh, there was a coin that says the name was your neighbor. Are you fucking serious, bro? A cryptocurrency. The name was your neighbor. I forgot the first name. I don't bro, she went to 11 something. Oh, you kidding me, bro? I have 2 million or something. I'm holding like 2 or 2.5, like it's in lock contract. I just locked it for a year in Binance Shiba, because that's the coin that showed me most of my money. Okay, like 320k. I couldn't grab all of it at the all-time high, but not that's not the all-time high, of course. It's way up there, guys. There, and I entered from anyway, it is a big story regarding SHIB, but yeah, like Shiba, I was looking into buying at that 5 level, somewhat around that 5 level, when it felt nearly that level. Where was that? Okay, again in 1 minute I'm not going to find it, so around this. Okay, buy from here. See, like I have a line drawn as well, like buy from this area, from that area. Okay, market has, yeah, I mean it went to 1250, man. That's like 2.5x already on SHIB. You, I'm out of crypto. I didn't even realize Bitcoin hit that high. Same thing, guys, same thing. You see that breakaway gap I had? Oh, come on, I have unselected that 3 times now. When it closed above, came back on the top, started shifting like crazy. Now let's see how far can it go. This is the weekly breakaway gap high. That's where the body closed. Now I want to see the weekly breakaway gap is broken. This is where I can consider one more buy. Okay, okay, for some people, why this is not your entry? Okay, because it has broken above. Guys, this is a weekly breakaway gap. I'm looking into an hourly candle. Okay, on the weekly, look into a daily candle or even 4 hours candle. Is it broken above? No, no, guys, no. That's why you cannot utilize that one. And what on the 4 hour, you, if you are looking into that, okay, that's way too higher. Okay, this is the 4 hours breakaway gap. If you are trading on 4 hours, then once market close above this fair value, you can take your buy here until that high. Once that high is taken, if it can create new fair value, it will continue higher to go for 70-80k price range. If it fails to create new fair, let's see. Okay, here, just look. When this high was taken at that same level, look, market has created a new fair value. See, what we want to see is market from that fair value continuing higher. From this fair value, where is your stop loss? Below the fair value gap or the third candle's low, whatever. Here market continued higher, took that buy side. This time it failed to displace or create fair value around that level. It started going lower. When it took these 4-hour swing low from there or there, it has either level you mark, it has created fair value. From that fair value, okay, let me bring back this one. From that fair value it continued lower. Where is the low? Here. At that same level created fair value. From that fair value, yes, it didn't even come until that far because there were these. So when that fair value was created, market continued lower. Where? The lows, okay, like this low, whatever. This is the first fair value, so I'm looking into that around. Oh shit, what just happened? I didn't realize what happened over there. Oh, I kept my order running. I kept my order running and I don't even know if it has taken all my sell side or not. This is NQH. This is where I want to see. Okay, now this is not a good entry anymore. Okay, like the equal low that I was expecting, it has taken that perfectly over there as well. So market can now go for that fair value revisit. It is what it is, but let's see if it wants to respect this and continue lower or not, because I'm looking into this stop loss at the better place. It cannot be any better. I forgot to cancel that one since it has taken that equal, but still I think it might work out based on the price and position. So this will be my first fair value of that leg. 52 days, 08 hours, 24 minutes. What happened? In that wave, I wanna quit from bonk. BTC gonna break all-time high? Yes, it is time for BTC to do that, since NQ, ES, Nvidia, all over, like all the big companies, big giants, they have done that. So BTC can easily do that right now, but I'm expecting a retracement as well. Like before it takes or breaks that all-time high, I'm expecting a small retracement first, and then it can break or retrace. Now here, why I'm not too confident, even though like I still believe market is going here, but why I'm not too confident about this one? When market took the second liquidity, other liquidity, which was 6400 level, okay, 6400 here, it failed to displace below that. So now based on the fair value I'm entering, all I want to see, when market is going below this, it is displacing lower. If not, I have to close my trade manually around that area, and it's creating a fair value. Same thing here, below that low it create, like at that low or below that low it created fair value, so it continued lower for the next level. The next level it failed to create the fair value, so now this is the level. Based on the bearish fair value, the entry I have taken, I want to see market is taking this liquidity and creating a fair value around this, so that it can go until that far. After that, if it wants to continue even lower for this breakaway gap, that area will decide if it's displacing lower the liquidity or not. These are the two liquidity levels. Okay, this is a sell side liquidity, this is a sell side liquidity from this area. Okay, whatever you can see I have marked. Okay, now I can remove a lot of the sell sides, to be honest, because why it's not selecting that line? Why? Oh, that's my entry line, come on. I'm actually in a trauma. I'm trying to remove this one, but it's not giving me any option to remove. Okay, so I didn't realize that red line is my entry line. Now scalping, if I exit here, okay, just here, let me see. Forget about the risk to reward and other stuff. That's 1:1.07, but all I'm willing to see is how much? $290. Isn't it good? Like 5 days, if you can even make $200, that $1,000 a week. I have made already how much? 600 something. It's showing 796 because I have $110 or $20 already profit running on this trade. So 600 something. In 2 days, I have made $2,278.50. Do I really need to like consider any more trades, anything for the rest of the week? Forget about tomorrow or today, things like that. For the rest of, oh damn it, I didn't realize it either. Okay, so if market can come here, I'm not even gonna hold until this low. I'm just gonna exit out here. It's 431, guys. I didn't realize. Why I'm exiting here is because it's otherwise it will give me some unexpected drawdown. Okay, I didn't even realize that it's 431. This entry by any, even if it goes for the sell side delivery, it's not valid for me anymore. Okay, and I don't even want to take any loss from this trade because it's a invalid entry for me. Even if I make that profit, okay, this much profit, I don't count this as a profitable trade or something. I really don't. 431 after 4, I should not even look. I didn't realize it's already 4. Shit, my clock is blocked by so many small notes on my monitor. Okay, I have so many notes on my monitor. So yeah, I mean, if I can get it here, I will be happy. Otherwise, I'm happy to stop out here. Just because it's already like 430 or something, I'm not willing to hold until that sell side or wherever market is going, this sell side, nothing. Just closing at that low because that's how far I saw my profit. If I can close here, then I will be not in any sort of drawdown on this Apex account. Apex, this is a very bad way of treating their customer. I'm sorry, but it's their rules. So if I want to trade in Apex, I have to comply with that. It's bullshit. Okay, so when market from my entry, it started coming until that far, that is where, let's say this is my max drawdown limit. When from here market moved until this low, which is 5.5 handle, my max drawdown moved 5.5 handle. Even if I got stopped out here and make profit, the drawdown will be here, max drawdown limit. Okay, so I don't want to, like yesterday I didn't know that, so the very last entry, okay, I'm happy, it stopped, like I got my profit at the highest level it reached previously. I'm happy. I don't really want to continue holding the trade after 4. It's $903, so another 220 or something I got from 220 30 whatever it is I got from this trade. I'm happy. I know it may still continue lower, but after 4 no trade is valid. Okay, like up until 430, yes, I can go up until that, but it's like 434, guys. I really don't want to hold that for that longer. I know this sell side all will be taken within a candle or two. Like since it's at the closing moment, another last moment push might come, and yeah, like that's what I was saying, like within a candle or two, until that will be taken. That's my expectation, but just because of 4 I just close my trade. Okay, look at the last hour volatility that is kicking in, like last maybe 15 minutes or something. 4:45, that will be the time. After that you will see market is trading something like this. Okay, okay, wrong drawing tool. I need to actually remove that on. And what is the alternative that I can utilize regarding that? Curve, durable curve, let's see. That one I don't know like what exactly happened, but whenever I'm trying to draw something and leaving that, it's auto readjusting like this way. So I don't really know what exactly went wrong. Oh, that doesn't add up. Okay, this will not make any sense, so I cannot utilize any of those. Path and durable curve, both I have to exit or remove from my chart. Why that happens? Okay, let me see if the curve I draw on a candle rather than an empty space. Let's say from here. Same thing, bro, same thing. So yeah, I think it's almost time to finish the session, finish the trading. Now I don't know if I have been able to provide anything or not. The polyline, okay, where is it? Polyline, ha, see, that's also doing the same thing. Thanks for letting me know, although I had no idea that that can actually work like that way, but it's also giving me that headache. Okay, see, like it jagged into one another like that way. So yeah, I mean, it is what, as I said, like within one or two candles that sell side will be delivered as well, and that is where market is heading. Yeah, I could have made more profit, but it is what it is, guys. Stick with your own rule. I'm stick with my rule. I'm happy that I closed here or whatever the level was. I'm happy with that. I don't really care much about how much I made or how much I could have made if I hold it until that sell side. This is the obvious level, because below that I have the breakaway gap. So after taking that, coming to this lower quadrant of the fair value, market can then continue its move higher like tomorrow, or it can completely disrespect this fair value and continue lower. For that, I want to see this fair value is broken, and the same concept that I have shared, like once this one is broken, I want to see market is rejecting from the 50% level on the 15 minutes chart and 1 minute chart. It's breaking or closing below one more time, tapping the lower portion. If it can create a fair value around that, it's even more high probability. I will take that. I will continue for a lower run. Simple. Okay, now with the price and with my entry, whatever the entry I took from here until this, that's my 1 to 2 or more than that provided. Even if I put it here, this is my 1 to 2, market is continuing lower, whatever it is, just because of the time I exited out of my trade. If I had enough time, I would continue to hold until that level, that trade. Okay, and see, like this fair value, when I draw it, I move my stop loss right here, because I believed that this fair value will hold the price from going any higher, because that created this BPR. balance price range on the bearish side. Buy side delivery, buy side imbalance, sell side inefficiency, sell side delivery, that created sell side imbalance, buy side inefficiency. So now market will go back again around that area. It doesn't need to completely fill it up, it can just tap on the lower portion and come lower as well. It, with a green candle that happened, market started coming lower immediately from that area. This is a strong area. Okay, that's another reason you saw me, like when I moved my stop loss in break even, I moved right at that level. Okay, so yeah, I mean, it is what it is. It was a profitable trade, or the trade idea was not wrong, but the problem is the time did not allow me to hold the trade. Okay, the move you are seeing here, the same thing, since it did not fill up any of this fair value, the same thing could happen on the opposite direction as well at the last moment. So continue to BTC analysis. Okay, BTC analysis, come on man, come on. I am out of crypto for a very long time. So for now, okay, for now, BTC, what it has done, it has left so many buy side liquidities. It has, what is the time frame on me? Okay, let me actually go in a single chart so that it makes some sense to you guys. And yeah, if the lower quadrant fails to hold, then the breakaway gap is the point of interest I'm looking into for tomorrow. If I trade tomorrow, I'm not sure if I'll trade or not, but whatever it is, depending on my, like today, okay, during the silver bullet, yesterday I didn't sleep, I was live streaming, and as I said, I have work as well, so without sleeping I went to job, 9-5 job, came back home. When I came back, I didn't even consider eating food, I just went to bed straight away. Okay, even I didn't took shower after coming back home. I just, like, I was so darn tired that I don't even remember how I drive all the way. Like when I was driving my car, I don't remember how I drive and came to home. Okay, that's how dizzy or tired I was. So I slept, and when I woke up on my funded account, I took 2 entries, both of them were profitable. On this challenge account today, I took 3 entries, all of them were profitable, like was profitable, that's why you're seeing this. But all of the entries I didn't take or close the position where I should be closing. Okay, like this one, the liquidity that I was targeting, I just closed here. Okay, so I just got $200 profit in it instead of that $700-800 worth of profit. But still I don't regret, or I have no problem seeing something like this, because it is what it is. That's the rule I have set for myself. The zero, you can follow these two guys for crypto analysis. ND Bitcoin, the moon. Okay, listen, if anyone anywhere is suggesting you to buy a new coin, just kick his ass, stay as far as possible from that guy. Okay, just stay as far as possible from that guy. In crypto, I can even create a coin and I can tell you all to buy this when I have, let's say, like I have 10,000 20,000 subscriber. I can tell you that okay, this coin will go to moon, you will buy. I can simply take all the money and rug pull the coin. I can create a crypto for you guys as well if I want to. So in crypto, these things are very important. Okay, like whenever someone is suggesting you to buy something new, just stay away from that guy. Think about Luna, what happened with Luna. That guy, the Sam Bankman or Sam Banksman, whatever the name is, Bankman, I know that part, and Sam, I know that part. That guy was so good. Okay, like even Nas Daily, if you know Nas Daily, NAS Daily, Nas Daily reported like his lifestyle, his thoughts. Nas Daily created video based on his thought process. Nas Daily had few million followers. I don't even remember like how many followers he has, because nowadays I'm not following anybody on my social media, so only some like religious sites and things like that, because I'm trying to stay as far as I can from the social medias. Okay, that's why you will see like when I'm coming in live stream, I just straight away click my live stream. I don't post anywhere else that I'm coming live, this or that, because I'm trying to avoid those things. When I look into my phone uses analysis, it drives me crazy. Like 7 hours, 8 hours I'm spending on all those bullshits every single day. That's 1/3 of a day. When that 7 hours I can utilize on improving something that can help me, and with my ability I can help others as well. For example, I have withdrawn money, I have donated money. I'm not gonna like give away the amount or say the amount, but I have donated pretty good amount of money. I have sent some money in Palestine, I have sent some money in Syria, I have done a lot of things. Okay, I have sent money to my parent as well, like my mother, so that she can donate it to the orphanage and other stuff over there back in my country. I have done those sort of things with my knowledge or my ability. Now if I spend the time on those sort of unusual or unnecessary things, this is where I'm diverting myself from improving my lifestyle or my trading or whatever it is. Every day I'm coming here, I'm showing, like yesterday live execution I showed you 1600 plus profit. Even I could have made more profit with that. The trades I'm taking, I'm saying that this is the obvious level, but still I'm not closing here just because of the live stream. Outside of live stream, this balance could have already reached my target today. Within 2 days I could have completed this challenge. Okay, it's $2400. Just yesterday the amount of money I just let it go, that money and today's money combined together, it could have been more than $4000. So I don't care about this one, because this is mostly I'm trying to like show you the live execution, the way I look into a specific thing, this sort of thing. That's why I don't care about this. But anyway, I'm not looking into those things. Now what I was saying is, Nas Daily, when he had millions of followers, that Sam Banksman coin, that that Luna, went up like crazy. Okay, why? Because that Sam Banksman was donating all the profit to different countries, doing good things for people. He came out with a very simple dress, like a trouser and a t-shirt or something. He came in front of people like he owns nothing. He lives a very simple, like something like that. When this bloody coin was on the peak of its hype, what happened? He took out all the money. Luna, people who doesn't look into crypto, let me show you Luna. There is no Luna. Okay, first of all, there is no more Luna. Now it's Loon C, and like Luna Classic, Loon C or something. Yeah, so Loon C. Okay, this is Luna Classic. This coin, you can see there is after a, see, this is the data you can see here. This is 0.000. This coin, after the rug pull, I don't know why it's still like this thing still exists in the market. What it did is, from 115 or $25, its all-time high. I remember that high because that I took that all-time high trade, and I made literally $8,000 with something like $200-300. Okay, I traded. I didn't buy it and hold it until it reached there. No. I bought something around $78 or something with a 10x leverage from Binance. Before, like during those days, Binance used to offer leverage to the Australian people as well. Now it doesn't offer Australian people to trade the future. So 10x leverage, whatever I got until that one, like I held it until I think 123 or 4, that was where I exited. I made that profit. The same profit I gave away when Luna was $14. Okay, the same profit, the same exact same amount with my $200 or $300, because I missed the news that it is actually it has vanished, it is rug pulling, whatever it is. The exact same profit I gave away with my own money as well, because I thought, okay, this is the lowest possible level from where Luna can bounce back up. I didn't had the news. Okay, I was not that as I said, like I was not looking into Forex calendars, economic calendars, crypto news, things like that. Just based on the technicals, I was entering into a trade. And let's say, like here, as you can see, like this is the last fair value gap from where it can bounce back. It is bouncing back, right? Isn't it bouncing back? Beautifully bouncing back. And what is this? This is a daily level. Okay, so I bought here, it never bounced back, it just continued its fall until it went like this. Okay, 0.000648. So from a $125 coin, it's now 1000 times below that level. So now this is how many x it has dropped. So people who had the news with a sell short from somewhat around the higher area, they could have made, like I have shared screenshots like that. I don't know if I still have that or not. One guy made nearly $1.2 million by holding it from that level, one single trade. Okay, so I don't care. These things you must have to avoid. You don't know who, like even no one knows who is Satoshi. Now Bitcoin is a hype. No one knows the creator or the person who created Bitcoin. No one knows that. No one has the idea. How Bitcoin is maintained? By mining, by what it calls, deflationary. Am I saying it right? I don't know. Like inflation, deflation. Yeah, so deflationary method, which is every time there is a transaction, a portion of it is burnt. On the other hand, how market is recovering that? From that transaction, whatever profit the miners or the blockchain is making, it's creating a portion of it as well. So every day Bitcoin will reduce a little, it will buy a little as well at the same time. Now why I'm expecting some sort of pullback when Bitcoin is nearly to its all-time high? Now I know this is where people's sentiment works the most, like it will break the all-time high, it will do that. In 3 days market moved like this. But when it will be time for the miners to give those mined coin into the market or push those mined coin into the market, what will they do? They will sell their mining coins, right? And this is a coin that they earned from $0 value. Now they are selling it for $64,000 value. What gonna happen there? Think this way. Okay, it will give a big crash on the market. That's why during the all-time highs, okay, when it crashed like this. Look at this one single day candle. $3,800 is the body. Look at this sort of candle. How much is that? This is $4,448, just the body, not even the low it saw during that moment, just the body, this much. Okay, and this move was a $15,000 move. I remember this move because on this specific day I had a trade with 4,000 US dollars, and that huge drop cost me nearly, like I was in profit like $14,000-15,000 profit on that trade. Okay, 14-15k profit altogether. That one single candle liquidated my position. Okay, I went to bed keeping my position open. It one single move, either that one or there was something like that happened around, okay, let me check, because I remember it was around 50k that market, yeah, so it came until 45k or something, yeah, 42k exactly. So this was the day. Okay, on the, I don't know if I can actually go back to that level. Double click to finish polyline. Okay, that polyline still is actually messed it anyway. I hope you guys got that point. That entire fall actually happened in a one single, like this. Okay, one single hour candle. This 1 hour dropped the market like $1,800 or something. Similar thing happened this area. Like this volatility I hate to see. Okay, like this one single candle, look at the high, 28,221. It's here 27,061. So that's like high to low. Think about it. Okay, like $2,000 in 1 hour. This is an hourly candle. Even in 1 minute, 15 minute, you have some moves like that, 1500, 20,000, 2000 moves like that. Okay, this is 388.6. so I follow few coins like top 20 coins. Listen, this is a good resource that you can use in terms of looking into the top coins, but I don't look into top 10 or top 20. I look into the market cap that has the lowest market cap inside of top 100. Okay, so lowest market cap. Now I will see the names first. I will do some technical analysis based on that. For example, what sort of technical analysis? If you go to the news or to its other discussions, okay, why this coin? Okay, you see there are some discussions, there are some informations over there. From there you can go for their website, look how they are allocating. If any coin is allocating less than 15% to the community, then ignore that coin. You see the blockchain is here. There will be a lot of information. Okay, like the popularity, it's currently sitting around this area. It's a people's host list. This many people are watching this coin. So many informations you can utilize, and based on those information you have now either ICT or support resistance, whatever. I don't care. Like I really don't care what. Every single trading strategy, if you have that strong psychology, a strong goal, a strong idea about what you are doing. For example, you are learning fair value, that it is called a fair value when three candles are not touching each other. This is a fair value. Now this is a fair value. Okay, like there is another fair value. You can draw so many fair values over. There is a fair value, here is so many, right? But if you don't know when a fair value will be tapped, when a fair value will not be tapped, when a fair value will be respected, when a fair value will be disrespected, and this is something you can ask someone else, right? You can ask me how I can understand that a fair value will be respected or disrespected, these things like that. This is something you can ask someone else, but will it work for you? I am seeing something. Let's say why I entered, like my last entry, if it was not, like why I closed, I already explained that as well, right? Because that's the psychology strategy that I'm trying to build in myself. I don't care, no matter what, I will not be participating, things like that. Okay, but why? Even though market left multiple fair values up there, up here, I still considered to enter into a trade from this fair value. There is nothing, it didn't take liquidity, it just broke a structure, created a fair value, it never reached there, but still I wanted to take that entry. Not because market cannot go there, it's not like that. Okay, market had spent too long here to go there. Usually what you will see is within maybe 2, 3 or 4, 5 candles, market will come back to that fair value from where it is willing to continue lower. It didn't happen here. It was here for long time. Now on the other hand, at this level, market had created a very strong sell side liquidity with, let me draw the line so that you can understand what I'm talking about. Where is that? Here. I don't know like what I clicked. See those levels? Now let me go back to 1 minute during that moment. See this? It has created that exact thing. On the other hand, as I'm saying, if market is willing to continue lower, it will create a fair value at that level or from the body, like inside of this range. Can you see a fair value right there? This is the body and this is the thing. Inside of that range, this is a fair value. But did I considered entering from this area? No, I entered from that area because above that, this is a order block for me. Okay, like this whole area is a order block, this until this. But the extreme one, that's the one that we mostly look into. This is why even I didn't put my stop loss at the high, I put here, because when the order block mean threshold is covered, usually the high is third candle of your fair value. When the order block mean threshold can cover this, I'm not willing to even give them that to handle, because first of all, this should act as a breakaway gap. Market should not fill it up completely. Why? Because I have another small little fair value right there. If market is like making me wrong by completely filling it up, then chances are high I'm wrong about my order block as well. But still, since it fulfilled my criteria that to become a order block, it must have to create a fair value at the range or right below the range, like right at this candle's low. I wanted to see a fair value or inside of the range. It has created that fair value. So now this is my order block. So that's, since that's been done or that was created by the market, I am willing to see until this far. Now sometimes this can happen, a little weak, a tick or two can go past that. That's why I put it here. If market had no wick, then my stop loss was here, right here, because that's the max I want to see market can go, and then it can continue lower. This entry I took because of that information, but by the meantime, what I said about this candle's entry, the last fair value, where did ICT talked about this? Nowhere. ICT talked about the fair value, but how many entries I have taken today? 3 entries. Before that, I have taken 2 more entries on my funded account based on that specific thing. Whatever I showed yesterday regarding the last fair value as well, did I lost any single trade over there? I didn't take the proper profit because I talked about that. Okay, like even though this is the obvious level, I'm not taking because it's in the live stream. I want to see if it can continue lower or not. I want to see, because people loves bigger values. Okay, you guys don't like this $200 trade, you will not like it. And once market is going below that level, even here a lot of people had this thought, okay, yeah, fucking idiot, he just closed the trade over there, it went all the way back there. Okay, a lot of people thought about that, but think this way, that by closing here I secured $240. What if this move, this last hour move, instead of coming lower, it happened from here, it went higher, because it has areas that it should revisit or retest, that it failed to revisit or retest. Then what? Then I'm idiot, I'm calling myself an idiot, that I'm a fucking idiot, that I had the opportunity to take the profit, I didn't take the profit, I took a stop loss instead of becoming $200 profitable, I am now $250 loser. So you have to be your own boss, you have to judge yourself. You cannot, I have shared something, if it doesn't work for you, you cannot come and say, okay bro, what the fuck you have shared, I just lost money because of that. The thing that I have shared, I have been doing for 2 years in a row now, like a straight 2 years, not a single fucking day I missed it. The day I don't trade, still I will look over there, I will set a positioning tool either on my phone that okay, this is a buy long or sell short. I will put a positioning tool, leave it like that, and I will create a simple alert over there, like if it's going to the profit, or I will create a alert over here if it's going to the loss. See the alert, I'll leave like that way, and then I will do whatever I want to do. If it hits the loss when I'm home or when I'm available to sit in front of the chart, I will look what exactly went wrong regarding that. That's how I improved myself. That's what I have been doing for 2 years. So if you don't practice it enough, you will not see it enough. Okay. Today, I think Shiva was talking about the entry. Yeah, so Shiva actually during the silver bullet took a loss. Okay, from here, this was the 15 minutes breakaway gap, or the second fair value gap before the silver bullet. This fair value, like first fair value gap, there was another fair value right here. Okay, when the silver bullet started, I already shared this at the very beginning. I like, if you are getting bored, I'm sorry about that, but this is important, that's why I'm repeating this. I'm trying to feed you one thing over and over again, so that next time you can understand what you can do better in terms of your trading. When silver bullet started, this is the silver bullet time. Okay, that black candle was the silver bullet starting time. Right at the starting, market took the sell side liquidity from here. I really don't know how far it had. Okay, so here it had until this far, because after that there is a fair value gap as well, if I'm not wrong. Okay, it had fair value around this area, so the 15 minutes it is, but that was the swing low, that how far I can look into the market took liquidity from. Now during the silver bullet, it has with that week. Okay, think this way, higher time frame point of interest, it has taken the sell side, it closed back into the first 15 minutes fair value, another higher time frame point of interest here. Now when it closed back there, I'm looking into mostly this high, I'm not even looking into that high, this high. If market can break above that, close above that, creating fair value, market has created that, so mostly my entry would look something like this, the third candle, or since in this case, okay, like even same thing, where is the mean threshold of the last down close candle, these two candles are my order block. It took the liquidity coming out of higher time frame point of interest, inside of the range I have my fair value gap, that's the mean threshold. This low covers the mean threshold, I'm happy to put here, if not maybe just a tick or two. What is the target? That is the only liquidity I'm seeing, but as I said, like there is nothing clear that can stop me. I would love to take, if I'm taking more than one lot, I would love to take a partial at around 1 to 2. I don't know if that is 1 to 2 or not, but think this way, like I would love to take a partial at 1 to 2, then the rest position I will hold until that new week opening gap, or sorry, new day opening gap, because that is the area previously market, once it broke below that, it never went above that area, so maximum is this far I would hold. Okay, and trail my stop loss. What market did? Market immediately closed below that fair value. Now if you know the fair value concept that I'm trying to feed you for last couple of days, this fair value was the only fair value from this low until that high that took liquidity or whatever. There is this bearish first fair value as well that market respected, broke below, so I will remove that confluence. Since there are so much resistance, my entry, okay, how much I lost over there, let me first calculate that. From that bullish fair value high until this candle's low, that's 6.75 handle. From here, a stop loss right above this candle. Okay, like the candle broke the fair value. If it was one candle, it will be still there. If since it's starting inside of that, I'm putting right there. Okay, this is where my stop loss is, right here. What is the most obvious level? This swing low, because it has a resistance over there, higher time frame point of interest. Now it's giving me 2.42 risk to reward because of the small or tight stop loss, but it's giving me 11 handle over here. So I lost 6.75. If I just take a profit over here, that will give me 11 handle. Did I mitigated my loss? Yes. How much I'm up? 3.25 no, actually 4.25 handle. 4.25 with one lot, this is $85. It's nothing, right? $85. Now if you have a set rules that okay, I am happy to, how many lots you took over there, let's say like the 6.5 handle for here. Okay, it's in a reply mode, so I cannot show you that. I'm happy to take $600 to $750 risk per trade. If that was something my risk over there, that's the risk over here as well. So this lot is only 4.75. This stop loss is only 4.75 handle. So in this case I can take nearly about like 6 or 7 lots. Now think about that 11 lots, or think about that profit multiplied by this or whatever, like 4.25 was the like break after the break even, 4.25 handle was the profit. So the profit is 4.25 into, forget about 6, let's count 4, 17 handle profit. With this I'm in $340 profit. Do I need to trade any more for the rest of the day? If I'm happy, I don't really need to, because I have mitigated my loss. I have turned my losing day into a trade into a profitable day, if that makes sense. Now if you know how London session may work, it will create either a high or a low of the day. If you know that London and Asia combine, okay, like pre New York session, those two session will create either the high or the low of the day. New York session will create the opposite side thing, okay, like opposite thing. Now forget all of this, took this. I know how my London session may work. I'm waiting if the rejection from here I can get for a buy setup again or not. If market gives me that, better. Instead what market did, market broke below that last line of defense. I already discussed about this area. So once the 50% rejection happens, this is still not the rejection, because on the 15 minutes market still didn't broke below yet, like during this moment. Okay, like if you missed it, I'm just making it clear. At this moment market still did not broke below that fair value gap. See, it didn't break below. When it broke below the fair value, why I'm looking into 15 minutes for that break below? This is the last fair value, remember? So why my concept, last fair value concept, this fair value gap, why I took the entry? Because it was the only fair value on the 1 minute. When it broke below in 1 minute, I don't need to look into another time frame, but for that, this is my profit. I cannot hold until any other level. This is my profit, because this is based on the 1 minute time frame. This fair value is the 15 minutes last fair value. So where you have to see the break below? 1 minute? No, you have to see the break below in 15 minutes. When it broke below the 15 minutes with the next candle, where can you enter? If you are trading in 15 minutes, this is your entry. Where is your stop loss? What did I tell you? If the candle is above the level, you can put there. Otherwise, this is your stop loss. But it's a huge fair value. That's why I'm happy to put at the top or something. And I already know. But usually, this is your stop loss. What is the target? This low is your target. Okay, this low. Now, let's see what in 15 minutes market has done. You got your entry with the very next candle, and market came right below that low. How far it can continue, that's none of your business. Are you not happy by doing that? you have taken 47 handles worth of profit. Why the hell you have to think, okay, there is another, or market can come until this for then reverse, there is more why? This is greed. This is what is causing you from making money, like stopping you from making money. On the 15 minutes I showed you how you can utilize the 15 minutes last fair value. Now the same thing, if you go back to 1 minute and that part where market still didn't close below that level, okay, the very next time when market closed below, this is where in 15 minutes market actually closed below that level. Let me go back. Now what you are looking into, a rejection from either, you are looking into 1 minute, right, at this moment. So now your close below is confirmed. From that confirmed close below, you are looking into this candle will either go to this middle point or very like near to that area. It will come lower one more time, close below one more time, then tap to the lower portion, then you will take the entry over there from that lower portion. Like once it again closes below, this is where you are taking your entry, and until the obvious liquidity that you have marked on your higher time frame or based on your 15 minutes time frame. That's most obvious is here. You can take some partial if it is good enough, but this is from that 15 minutes concept and 15 minutes low. For the 15 minutes at this stage, this is the most obvious level. That's why I'm saying you can go until that far, because you are using a 15 minutes interest over here. So in 1 minute, that's how you are willing to see that your market is doing. Now it has done that picture perfect, like this is the picture perfect example of that trade. See, the entry happened, market started going lower and lower like crazy, okay, until that was taken. Anyway, I have showed it multiple times, and as I said that whatever it is, why I looked into the confirmation in 15 minutes, because that's in 15 minutes, okay, the fair value you are using is a 15 minutes fair value, so the break needs to happen in 15 minutes. If you are trading in 15 minutes time frame, then you don't need to wait for that middle point rejection. You can just literally enter from that area, okay. Once it breaks below the last fair value, closes below, you can enter from that area until the most obvious liquidity. Keep revising, we love it. Thank you brother. I hope this part is clear. Like last fair value concept, it's this. You are not looking into, okay, there are these and there is no fair value, so market cannot reverse from this area, the next level is here, so I can hold until there. No, you cannot do that. That is what called greed, okay. Let's say it will work once, twice, thrice, or maybe little more. Now what happened here? See, that same area market came back. How can you miss all this trade and then wait until this? Now when it came here, if I'm not wrong, after that market started going lower, and yeah, okay, it even went to your stop loss as well. See, it didn't even reach to that fair value, it even went to the stop loss. How you can go through all these things and the emotions? Now you are thinking like, if myself, okay, I had nearly $800-1,000 profit with one lot of entry. That's one lot entry, okay, from that low until this low, that's 47 handle, that is 47 into 20, $940 with one single lot. Now based on your stop loss or risk management, if you can take more than one lot, if it allows you to do that, how much you are getting over there, multiply by that. That's how much money you saw as your profit, but just by not taking that profit, becoming greedy, you lost all of your profit, and eventually you even lost from your own money as well. You are giving signal now. Oi, are you giving signal? What the hell, bro? Is it sounding like that? If it is that, then don't NI is the continuation of London? No. every single ICT trader looks into Asia as a consolidation, New York as a manipulation, London as a manipulation, and New York as the distribution. Once the distribution happens, accumulation, manipulation, distribution, this is the range for the rest of the day. Market will retrace inside of that range, inside of that Asia as well. Market will continue lower, take that sell side liquidity. If market is willing to go bullish, market will from here go and take that buy side, create a all-time high. There are very few days that both of those days aligns together. Okay, if there is no like sure short news or something, market will not align together both of the days. Especially the AM session with the London session, it will do something like that. Especially the AM session, New York AM. So like London session low was created here, if I'm not wrong, because I didn't trade, I didn't look into. Yeah, so that was the London low. First market took the London low, went higher, then it started coming lower one more time. So London low session liquidity is very important. This is the accumulation, manipulation happened. Market retraced back into the London sessions range or wherever it had the highest resistance that you can say. Market traded into that after taking London low. Now it has continued lower. The low was created during the AM session, it's still intact. Market never went below that low. Okay, until I think the last hour actually it went lower. Yeah, so at the last hour market again came lower. This is the day market continued. Let me check the Forex calendar, because usually I'll give you like why I said that. Okay, so yesterday 8:30 we had prelim, so that is not something major, it has negative. This one came positive as well. Today the news was not something that we should be mostly concerned about. I don't know if 8:30 was a big nonsense or not, but this sort of continuation you will mostly not see every other day, if I'm not wrong. See, like accumulation happened, manipulation happened, market the last hour what it did, it came lower. So accumulation, now you can say the AM session also continued. Yes, I can see that as well, but accumulation, manipulation, reaccumulation, remanipulation, now the distribution happened, and that those liquidities were most obvious for the market. Today's London did that. Here London was continuing lower, it first went all the way up. Now that was the all-time high, so after that you can expect this sort of thing. Okay, so whatever you saw here, it went the opposite way. Whatever you saw here, New York continued for a while, went opposite way, again continued for a while, all-time high, last moment move was this. This is also London session. Okay, like all these candles, the box is showing the starting and the kill zone, it's not the end of London session. London session ends at 10 AM. Okay, 2 AM it starts and 10 AM it finish. That's why 10 AM we have a silver bullet. So whatever you are seeing, this is all in between that London session moment and the 8:30 or something, that is where the lunch hour finishes or something in London session. I'm not quite sure about that lunch part because I don't care about lunch. If market is giving me setup, I go with the setup. I don't care about 12, 11, 1 that way. Like 12 PM you will see market is still continuing its move. Sometimes it will of course start to consolidate as well, but most of the time it never stops until it's 5 PM over here. Market never stops, because think this way. Okay, like if you are in a trade, unless like you are someone with a strong psychology who doesn't give a damn about the money, entry exit set, a stop loss set, take profit set. I'm done, I'm closing my chart, going to bed or going to do whatever I want to do. If you are that type of guy, then this might be a different thing. But think this way, you are working in a office or in a business, okay, in a office or business. If you are in a trade that you are managing someone else's money, will you be able to leave the trade open and go to your lunch break for 1 hour and have a cigarette outside or do this do that when you are inside of a trade? And because it is 12 a.m. or 12 p.m, it's my live lunch time, I will just close my trade before it hits my target or reach to my target. I will close and I will go to my lunch. Does that it happens like this way? In a trading house or in a trading room, there will be hundreds of people sitting trading together, right? Some of them is not in a position based on their strategy or whatever they are utilizing. They can go for the lunch. People who are already in a lunch, they will either look for a like nearest level from where, like let's say I must have to go to the washroom, okay, I cannot hold it anymore, and I can close at the nearest level. I can go to the washroom, I have secured some profit for the day, I can come back and go again. How do you think those trading industry or trading offices work? Just let's see, like let's see. I'm not gonna go through videos or something. This is how, I don't know, like this is how it looks inside of a office. Why it's not giving me bigger thing? See, like both side computers, monitors, things like that. So this is something like, I don't know, this is maybe AI generated or something, but that's usually how it looks in reality as well. This is how it looks in reality as well. Even if it's AI generated or animated, whatever, that's how it looks. These ideas or this AI generated thing didn't came out of nowhere. That's how it looks, okay? Even like if I don't know if there is anything real life or not, but whatever it is, you will, I hope you guys know like that this sort of thing is how people looks into the trade inside of a corporate office or the big hedge funds, whatever you are talking about. So you think all of them, okay, 12 m, just leave the position, go for lunch break, no more trading. You think that's how they work? So I don't care about it's becoming lunch or it's becoming this or that. I don't really care. The thing that I care about, okay, there is a core PCE or PMI or whatever, like the big three, okay? Just a second. There is a this non-farm thing, the CPI, the FOMC. These big three news, you should not trade before or at the news, you should trade after the news. Other than that, like this is the red folder news at 8:30. Let's see what happened in at 8:30, like how big of a move it gave us. This is 9:30 candle, okay, this candle 9:30. Let's see, comparing to the 9:30, which is the US open, or yeah, like in New York open. Compared to this, let's see the 8:30 candle. Oh, I'm looking into 15 minutes chart, so I should know. That's too far behind, okay. Okay, this is the 8:30. So that big news, this is what it did. It actually gave you another opportunity to enter from here and target that low. That's what it did. This is the Judas swing. News took the buy side, accumulation, manipulation, distribution. Done. Just that is what the 8:30 did. Now let me go to 1 minute and see that exact candle as well. That's your red folder news. Now compare that, it's only this much. Compare that with your FOMC with NFP, non-farm payroll, and CPI. When was our CPI? We had a CPI, right? I don't know if it's too far behind. We can FOMC meeting. Okay, this one 2 p.m. Wednesday 21st February. Wednesday 2 p.m. 21st February 25. Okay, that far I will not be able to go in 1 minute. Let's look into the 5 minute. 2 p.m. 21st February 22. This is 21st February. The last hour, the what was it? Nvidia earning report came. That was the move after that. Okay, this is the 2 p.m. move on the 5 minutes chart. And what is the range of that move? 487.25, 22.25. So from the low to high, the move was what, how much? $65 or something. 65. Now the same thing, let's go back to our today's move and let's see what happened here. No, that's 9:30, 8:30. From this until that, 60.75. This is 8:30, right? Yeah, 60.75 in 5 minutes and 23.50. So what is the move? $37. So what was there, I forgot already. By the time I reached here, $65 or whatever it is. Here 35. So half of that volatility you saw here on a red folder news where FOMC member was speaking, okay, meeting, and today it was a report, a red folder report, the GDP, gross domestic product or something, I don't know. Yes, actual greater than forecast is good for currency. Even it didn't deliver you that, guys. Oh, actually no, sorry, it actually delivered. I'm sorry, because that should send the market lower, and market was bearish the rest of the day. Okay, yeah, it actually delivered. I'm sorry about that, got a bit confused. But so why that news positive is bad for, or bearish sentiment for this future, is because of DXY. Okay, during that news the first move should be little upwards, 8:30, like this candle. It maybe, I don't know, in 1 minute that will be more clear, because maybe first candle went higher, then it started 8:30. Yeah, so that candle was okay, the news was positive, it actually did not deliver that. Okay, DXY, see, DXY is falling. NQ, if it follows DXY, it should go higher, and the bullish bias that I had, it would played out, but it's not following DXY at all. Because if it's good for the currency, DXY should go higher, NQ should fall. NQ is falling, but DXY is not going higher. So I really, that's why I don't go to DXY too much, because future contracts, they are not a like in a very strong relation with DXY. On the other hand, the same move, if I'm not wrong, see, like it is giving you more of a bullish move than the bearish. Look, the whole day it is doing more of a bullish moves. Okay, like it's going higher. On DXY it's going lower, right? It's creating lower lows. Here it's creating higher highs. GBP USD, same thing. From the retracement, whatever it is, the whole day it was going higher. During the news, first fake move or something around 8. Okay, no, that's a different day, maybe I'm looking. Yeah, so the same, the whole day, like today, 28th of February, market is going higher. Okay, overall the move is bullish. Market never came back to those sort of level, the lows it has created during Asia session. Even I don't know, like London session, Asia session, it was going upwards, bullish. It has taken all these buy side liquidities. It has done the same thing. Okay, these are the pairs that are correlated with those news. And since DXY is falling, it is going higher. But first of all, DXY should not fall after a positive news, and it is falling from a good area. This daily fair value gap should be broken first. If this is broken, market will go. I had the levels drawn, right? I don't really know where I had. Okay, yeah, here. Okay, so it actually broke once, revisited that fair value one more time. Yeah, so I'm expecting a lower run from DXY, like that volume imbalance or new day opening gap, what we had over there. It's a new day, yeah, not a new week, new day opening gap. Market revisited that, failed to go above. Also previously it has closed below. There are so many FVG on chart. How do we know which one is real and which one is fake? Okay. That's what I said. If you practice these things, like look into every single FVG wherever you can find, so many, right? Let's say in a move, if there is 4 or 5, look into that, mark every FVG, see which FVG market is respecting the most of the time. Then, like, this is how you are learning. I'm not saying you're trading, okay? Since you have asked the question, you should be learning first. That's the thing I'm telling you, okay? Like, don't get me wrong, you might have a profitable strategy, you can utilize that in terms of making or placing your trades. But regarding the FVG, yeah, Virender, please ask, no problem. And by the meantime, so how you learn is, there are so many, right? There are so many fair value gaps. Which one market is coming back and which one market is disrespecting or not respecting at all. On this move, I have 4 fair values. Marked all of them. Sorry, I marked all of them. First one, disrespected. Why? I don't know. Remove it. Second one, body close below or completely filled up. I will consider this as a disrespect as well. Close it. This one and this one, these two are the fair value. This one market never came to revisit. This one market retested and went higher. Why? Now this is where, let me give you 2 things. Number 1 is, from the low to the high, wherever it has created and then retracing, this is the first fair value, this is the second fair value. So this should act as a breakaway gap that market will either never trade this, or market will tap into it or trade it and keep the portion open unfilled. It will go higher from that if it is willing to go higher. That's the first fair value. So it has 2 conditions. It cannot be completely filled or it can be completely unfilled. 2 conditions, okay? 1, cannot be completely filled, or can be unfilled completely. I hope you got the point. So that condition is met with this fair value. Now this fair value, market can fill it up completely, it can tap the upper portion, it can close the body at the lower portion, whatever, I don't care. This is my entry. A stop loss has to be below this fair value's low. Okay, so since there is a volume imbalance, my stop loss has to be like, if even I'm entering from here, my stop loss has to be around this area, below that fair value. If the volume imbalance not here, I might have put it here, because I believe it will not be completely filled. That's my belief. Market will do that, I don't know, but based on this information, I'm looking into every single fair value. See, from this swing low until that high, from where market retraced, first fair value, okay, let me remove this one for now, first fair value and second fair value. Now this should act as a breakaway gap, market will never come or fill that area, and this should act as the fair value, market can fill it up completely, whatever it is. That same thing about the breakaway gap. Okay, what market did, it did not give a damn to this area, it just respected the first, second, respected that, went higher. Now this is the first fair value market has created from this swing low until that high. Market is trading inside of that fair value. What is my thing? Once market breaks below that fair value, if market can do that, I will use this fair value to take sell short until this fair value. Okay, mostly the low is the first target, but I'm saying like I will be bearish until this fair value. When this fair value, if it fails to send market higher again, if it broke below again, I'm taking sell short using this until this fair value is sending the market higher. If this fair value also fails, I'm using this as a sell short until where? From the whole move, where is my first fair value? I can consider one here, but I'm not willing to do that. This is the first fair value, or the breakaway gap that market never revisited. Here it didn't even come to this fair value also. So now don't tell or don't ask me why it didn't come to this. I don't know, no one knows. Okay, we were bullish, market simply continued to be bullish, it never revisited that area. So if anyone is giving you answer now, confluence, yeah, I can see, like, because of the experience or because of what I have so far done, I can see some confluence around this area, that I can say that okay, market has taken liquidity here and liquidity from the other levels as well, along with these lows. Okay, I know, like, this is where I was bullish and I started looking into buy longs. That's why I know this low very well. So market has taken liquidity from multiple levels. This is the breaker. This is one of the strongest breaker. Okay, like one of the strongest breaker. This breaker, like breaker block, is until this for the whole thing. Okay, but the extreme one, the same way we look into the candle, this is where market failed to come even lower one more time. See the bodies, that's where the market closed, started continuing. This is the breaker. At the same time, from this and from this, in between this area, that's the swing high, right? If market will continue higher or not, that area, did market created a fair value? Yeah, I know it's a small one. It created fair value, it continued higher. Same thing, that area, did market created a fair value? It created a fair value, from that it continued higher. Same thing, this area, did it created a fair value? It not just created a fair value, it created a huge opening gap as well. Like, this is the fair value, and with that a opening gap as well. So continued higher from where? The very next fair value market. That's how far it retraced and then continued. Here, did it created a fair value? Now before I go to that, this is the swing high. It created a fair value here, but it didn't respect over there, it continued lower. Now look into the areas where it was revisiting. For example, this fair value, Did market created any fair value when it was doing this? Any bearish fair value over here? Same thing. I mean, this is the first high, so from this area let's look here. When it closed above that level and created this fair value, there is not a single bearish fair value, or it never disrespected any bullish fair value. When this high was taken, sorry, here when this high was taken, created a fair value at the same area in between the range, but when market was revisiting that one single candle closed below already. Okay, like you are waiting for the retest, right? Retest already disrespected that. By the meantime, the very next candle created a bearish fair value here as well. Now why is this? Because market is already moving too far above from its initial place. It has to rebalance some imbalance. Okay, the imbalance that it failed to fill up here, it filled up here, it never rebalanced any of these fair values, so it had to do some of this as well. Also, it will not continuously expand. Expansion after expansion, you can expect either a retracement or a consolidation. After that it will expand again. Retracement happened, expanded again. Now from here market took some liquidity, market again like reached to the level. Now this level, why I'm looking into that is because from this low until that swing high, this is the equilibrium. Below that, this is my discounted PDRS. So it respected the very first discounted array, it started going higher. No problem with that, but it will balance the way like this way. Once it's balanced, market closed above that high, it created again fair value, not just one but below one, above one. What happened? Market continued higher. Same thing, look, when this retracement was happening, it didn't create a single fair value. Yes, I know there is some opening gap, but that gap did not even created a fair value. When this gap happened, the candle created a fair value right there. There is no fair value gap over there. The opening gap, it's a strong fair value, but what happened? The next day it broke above, where the market retested that is your only gap. Okay, that gap was retested based on my analysis or based on my inversion fair value strategy. This is your entry. That candle, the candle that broke above, that candle is your exit, or you already got your entry here, but anyway, this is your stop loss. Target what? Target the most obvious high. It delivered that. Now market is again creating this. It failed to close above and displace above. So I'm bit confused if this fair value will hold or if this fair value will send the market higher. Whatever it is, if this fair value can send the market higher, I'm looking into this high. If market can create a fair value gap at that level, I'm willing to hold until wherever it wants to go. Okay, like I'm bullish until it wherever it wants to go. But if this fair value fails to hold, that aligns perfectly with what I just showed you, because liquidity taken, it failed to displace higher or continue higher. There is no fair value, new fair value created at that level. So now I can expect market can go take these liquidities up until this far. Okay, so whatever in between, I don't care. All I care right now is the sell side, this fair value, and all I care about this fair value. Nothing else is a area of concern for me. I want to see either it's respected market going above the buy side and creating new fair value at the same level, or I want to see market is displacing or closing below that on the daily. Then on the hourly, 15 minutes, 1 minute, whatever it is, I can utilize this fair value for a sell short delivery for longer. Now let's see. Go weekly. What do you mean go weekly? Do not mock with me. Okay, do not mock with me. Weekly, it had so many things over here, the same thing. fair value, there was your breaker, that was the high. That's how far market came. Okay, that was the high of that move. Market created fair value at that high, market traded that fair value, started going higher. Even if you consider, like, I'm not looking too far back, as I said, I'm looking immediate. That's the most important lesson you can take away from me. Okay, I'm not looking into this high, I'm looking into this. Wherever this high happened, and if there is another swing high on this move, that is the high I'm looking into. This is the high, it created that, continued higher. Where is the fair value? That fair value, that weekly fair value, continued higher. Same thing. Okay, I'm willing to see another move towards the upside above the all-time high. Even like if you look at the all-time high, look at that fair value that's aligning with that. Okay, where do I want to see a fair value? In between these areas, from the body to the high, here in this range, it has created that. So I don't really need to look into this far back, but as I'm saying, like, for if you are willing to see that reference, that is the reference. It has done everything that can make sure, or that can confirm, that market will go higher. I think the same thing on here as well, the last fair value. Yeah, when market closed above or closed at the top in this case, although yeah, came on that upper portion, continued higher. Yeah, I know it did not close exactly above that level, but weekly, guys, this is 7 days worth of candle. So for the entry, you are waiting one more day or something, so 7-8 days worth of move. So it will have something in your daily level as well. Okay, there are fair value gaps, it didn't reach until close proximity entry. I don't know, like weekly, if you are using, good luck getting a entry and a stop loss. It can fall maybe. Okay, so based on the weekly, okay, weekly, it's still holding, this fair value is still holding, and it has done that. Now above here we have no reference point, as the way I was marking. Okay, here I was marking that market went above that weekly swing high, created a fair value. Here I have no reference point. From daily, I found this week's high as a reference point, or even if I consider, okay, this can be considered, and based on this, market can fall, and that's what I'm actually willing to see at the moment, that it will start to go on the sell side delivery after it's failing to displace higher last 2 days. I was looking for reference, that's why I asked lol. Okay, no, all good, reference as, okay, so many lines one more time. So yeah, I mean, that's how I look into the chart, and that's how much I have to worry about. The most I worry, I don't even go weekly that often, to be honest. Daily is the best, because I trade in 1 minute, guys. What the hell, why should I even go to daily? Like 24 hours and 60 minutes, this is 1440 candles in 1 day, and whatever reference I'm finding from daily, how many days? Like 1440 times all those. Okay, so I really don't need more reference than that. This fair value I'm looking an eye, and this fair value I'm looking an eye. That's it, nothing else. Now let me read some other comments. How do you know which is a valid retracement? Like in uptrend, how many bearish candles you need to consider in a retracement? Bro, I don't look into how many candles. Okay, like 5, 6, 7, I don't look like that way. Retracement is a retracement to me, I don't care. Okay, I really don't care about valid retracement or something. For example, why this is not a retracement for me? When market gave me this, okay, liquidity grab, market structure shift. However, like, let's say there are candles over there, that's gap, that gap is not a candle, is not a gap. Think this way, liquidity grab, market structure shift with whatever gap, jump, fair fair value, fair value, fair value, market is going higher. The first time it showed a sign of reversal was here. I mean, sign of retracement was here. I draw a fib in my discount, whatever PDRs I have. For example, I have this fair value with that volume imbalance. I'm looking if market can come here, and then I will look, like I will enter and I will look for a buy side delivery. Market went higher, now it's giving me another sign of retracement. The low is always constant, right? It will never change until, like, it will never change means what, like from this to that, this low will be here forever. You don't know where the next candle will be. You already know where the low is. So low will stay here, this will extend there. Now I have one more array that's sitting here. I'm expecting market, this, since I have two fair values, I'm expecting this will be a breakaway gap, this will be my entry gap. So I will place a order over here. I will put my stop loss usually at 1, but this level is a good enough level since multiple fair values, and I'm expecting this will be a breakaway gap. Market didn't come to my breakaway gap, it went that much higher. Again it started giving me retracement. I'm extending the fib level. I'm looking into my OTZ if possible. I'm entering from OTZ, but since, as I said, this is a breakaway gap and that's what aligning around that level, I will look into my premium discount. So still that is the discounted first array, this is the breakaway gap that market will not fill up completely or not fill up at all. Okay, two rules I said that. So that's the initial thing that I can do, but for me I always target 1 to 2. Okay, like I have backtested it enough to trust in this. Market retested to that premium discounted array, market went to my take profit. After that I don't care what market is doing. So how I decide a retracement is whenever on a bullish move I'm seeing a retracement after the market structure shift or break of a structure happened, which was first this candle. I'm drawing from the low to high my OTZ or premium discount. I'm marking the array, willing to take entry there, no problem. If it's a reversal, then my liquidity grab market structure shift the way I thought, it's not a it's not something that I should be looking into. I'm wrong about that market analysis. Okay, I'm willing to keep things simple. The more complicated it will be, listen, I'm not willing to say the name, but what happens is I know a lot of people. Okay, I know a lot of people who are really good at saying or reading the price. Okay, like during the live market will do this, do that, go here, this candle will be a big bull candle, this will be a big bear candle, this sort of thing. You will know a lot of people as well who are very good at technical analysis, but they are not good when they are executing. They are not, like 3 trades I have taken, forget about I didn't take the profit to the obvious level, or I did that, I did this. Am I profitable? How many loss you saw me hitting today? Not a single. Yesterday as well, I didn't take the trade. The very first trade that I took, I said like, yeah, I know this is the most obvious level, but I'm not gonna take the profit there, let it hit the stop loss. It hit the stop loss. That's the only loss you saw yesterday as well. How many trades I took, I got profit. Now will it work every time? No, there will be days where I will be hitting losses as well. Like couple of days ago, maybe last week Friday or Thursday, something like that, I was trying to counter trend. Okay, like what I was expecting the last hour was exactly what market did today during the last hour. Look at the last hour move today. Let me take up all those. Okay, this small retracement, okay, like this is not Friday. Usually Friday it will be a bigger retracement. Okay, new day opened, market opened with a gap. So this retracement was what I was trying to catch during the last hour, but that didn't happen. Market actually continued lower, so I took a loss. It's okay, there will be days like that, but at least I know what I'm doing. If I continuously, okay, market has created a huge gap over here, a new day opening gap, what you can use it as a reference point. But do you know if market will continue lower first and then go higher, or first it will go higher, it will take all this liquidity, then it come lower. So this is a strong gap that you are seeing. That's just the new opening of the market. Mostly it will consolidate. First few candles or few minutes it will extend the same thing. Today, oh, I have already removed it, but let me remove this big. What's the date today? 29th. How far I have went? I'm an idiot. Okay, I went too far back to check the 1 minute candle. New day opening gap. I have removed my line. What the hell? I will show you what exactly market did around that area. I was expecting a lower open. Market will break above that lower open, like the gap, and market will continue higher. Unfortunately, market broke below that open, and market never ever went back to that here. Where is it? Why cannot I find it, man? Okay, here somewhere around this area. 5 6. This is from 25th. What's happening, guys? My brain is now not working at all. Why I'm looking there? New day opening gap. It should be somewhere here, the 6 p.m. Here. Okay, that's why I was not finding it, because it was some overlapping bloody candle and I forgot. You see, this is the closing, that's the new day opening. Eventually market started bearish. Now this new day opening gap, look, when market, it just broke below once, never on the day market broke above that area. Here as well, okay, like it's starting green. I'm happy to see that, but I don't want to see it's breaking below and staying below. I want to see this gap is holding. So let me actually put it this way. So now I have a range, okay, from this to this opening gap. It's very powerful, guys. Opening gap and new day, new week, these are very powerful opening gaps. The power, if you are willing, so NWOG, this is the new week opening gap. That's the greatest, the most powerful. Then because this on for 5 6 7 week, market will go to that area and it will either find support or resistance based on from which side you are looking into that opening gap. So it will find that for several weeks. So new week opening gap, you have to keep at least like 4 to 6 weeks, like for a month at least in your chart. That area will work as a magnet for very long time. Okay, that's the highest powerful. After that, the new day opening gap, NDOG, NDOG. Okay, after this there comes the FVG or fair value, the internal whatever it is. Okay, what I'm writing I really don't know. FVG. After that you can, like, inversion fair value is also the same FVG concept, or exact same thing. How we mark the FVG, we mark the inversion as well. Yeah, there are some other confluences, but that's also a thing you can write here. After that, the volume imbalance is the last powerful or possible Oh shit, this road work again, man. I cannot even concentrate over here. That's the last powerful gap. Okay, so the highest powerful is this, or the most powerful. We look for this on the Monday or Sunday open, whatever you call it. If there is, for example, this week there was no gap. Okay, like it was less than something that you can consider, like this much. Okay, it's okay, not that big, because I'm looking into the wrong side here. This was the new week gap, like just how much, 0.75. so just 0.75 or 3 ticks, not even a handle. This is not a gap, it's just a printing error or something that you can say. Okay, so that's not a gap. See the new day opening gap, you can see the difference here. You can see like $5 or $10 worth of gap. That's why this gap this week we didn't consider anything. Same here. Okay, there was literally not a like significant weekly gap. See here, this gap is significant. Closed here, we closed here. This is at least $4. You can look into that as well. You will see some reaction from there in 1 minute as well. I don't know, like 1 minute, 15 minutes, whatever it is. It's too far, but whatever. Look at this specific area, just that gap. Okay, when market came, it found some resistance, broke above, some support, whatever, like it came little lower. So gap, we can look into a better gap on the other time frame as well, like 15 minutes or 5 minutes. That gap will be little bigger. When it came here, it started going higher from that. Now what I said is it will act as a magnet when market multiple times, okay, these areas multiple times, market came lower, market again went there, went higher, came back, this sort of things. Now this is a very small gap. Usually weekly gap is something like this big. It is a huge range. You know, if you trade ICT, you know weekly gap is not that small every time. It's small because of the market volatility or the way price is reacting. People are pretty like finding it pretty hard to judge the gaps at this moment. What we usually do is on the daily level, we look for this sort of things. Okay, like this sort of things. This was the strong area. Market went above that, upper portion respected once, went again, went, took the this sort of things. So this gap, this is a daily new day opening gap, end dog. This is also a new day opening gap. Oh, not in wag, in dog. Okay, yeah, so that sort of thing. This is also a new day opening gap. That's why this is a very important area, and this area, it will, this is also called liquidity void. Where is the liquidity void? In between those 2 weeks, from here to here, this far there was no trade, no trade at all. Okay, no buy side was offered, no sell side was offered, nothing. So that specific part is a very strong area over there. That's liquidity void. That's also a ICT speedy array. When there is a pure gap, okay, like not just the gap with body or wicks, just a gap like this. Here it was overlapping each other, right? The wick was overlapping, just the body is not synchronizing. That's not a liquidity void. Here it's not just the body, the wick is also keeping gap over there. So there was no trade. Okay, why I'm saying there was no trade on this day? That was the highest price reached, the wick, the high. So this is where price had some trades over there. The next day market was supposed to start from this area. Okay, market is supposed to start open from this area, and then if it wants to continue higher, it can continue higher. Market started from here. That already no trade gap was created between those levels. Now after market opening at that level, the next day it traded lower up until that far. So previous day that was the highest market traded. this day that is the lowest market traded. What happened to this internal area? This is where market has liquidity void, there is no trade at all. So that's why this area has too many confluences: new day opening gap, fair value gap, liquidity void. It's the strongest possible area on your chart right now. Forget about monthly fair value, weekly fair value, this and that. This is the strongest possible area. On the other hand, why this is the strongest? This entire thing can be considered as your order block. Why I'm marking this one, why not the bigger one? Because this one has the lowest body. Okay, that's why this one, otherwise I would mark that one. Liquidity taken, market structure shift, low, high, lower, low. Where is the highest up close candle in between that swing? This one. Everything aligning there like crazy. Okay, that week actually came until that breaker, and then it started going higher. So that's why also, so this area I can consider, like, even if I see a bearish move towards the downside, this is the area that has 10-20 things in a row. Okay, like I'm just making up 10-20, but don't go like that way. Breaker block, order block, fair value gap, liquidity void, new day opening gap. 5 things. These 5 things I don't believe market will break anymore, ever, like ever. Forget about whatever it has left over there, unless that same thing, the global financial economic crisis. If something like that does not happen anytime soon, even if we see a bear period, maybe until those lows, maybe until this low and that fair value area, after that I don't believe it will ever be broken. Like that's my concern. I really don't know, because if you look into the bigger picture, let's go to the monthly or even yearly or something, it's the curve is upwards, guys. It's this. Okay, all those small little moves or retracement that you are seeing in between a month or two, this, it's what, 2018 global crisis, 1920, that during those moments we had that covid, the toughest moment, like these sort of areas, all those things. Okay, so whatever it is, I believe this is, if this is the curve, this big retracement had to happen. It happened. It crushed so many families, so many companies out of the scene. Okay, this move, it crushed so many people, so many big companies, big competitors out of the area. Now it is continuing the same thing. You can see this sort of a small move, then bigger move. You are seeing that by the time the next crash will come, market will be somewhat like 25, 30, $40,000. I don't know, like I'm just based on what you can see. Okay, that's what I'm trying to give you here. Like by the time the next big crash like this on a monthly chart will happen, market will already reach until this far, and then there will be a crash like this. So that area is too far above the reach of our people, and I don't know, like I will even live that long to see that or not, but that's what I believe. Okay, like a stock market, or since this is what, US 500 or US 100, this is what, top 500 or top 100 companies of the USA, their share ETF. This is a ETF. If I'm not wrong, this is actually a ETF. In the crypto term, we call this a ETF. It's a combination of top 100 US companies or something. So if that is the case, if all of them are not going bankrupt or closing up, this sort of move will not come anytime soon. That's what I believe. I don't know, like I might be wrong. That's completely something that you can have a different opinion about, and no argument, nothing regarding that. Bitcoin, okay, it started the move, the rally. created a high market. It's a new market, guys. Just think, this is its journey based on Binance. Okay, Binance is the most trustworthy, well-known company. This is its journey. This 1 month, look at the move. These moves, look at the moves. It's making the move. The problem is it didn't get enough time to breathe higher. Okay, if the breathe was higher, that low would make no difference to people's life. This low, the same way, if you are comparing it with NQ, that made no difference to people who entered from this sort of area or early stages. It made no difference. It has delivered whatever it had to until, like, see, until this far. It started with $700. This is 1005 or whatever, 1000 $500. So it's how many times over there? That is 21 times almost. Okay, if not 20 times, let's keep it like that way. It already gave you 20 times of your investment. So that retracement did nothing to them. It may, yeah, it took maybe 3-4 times of their total profit that they have seen. Like, the retracement happened around, comparing to what the price they bought with, okay, from the low, or even if from these sort of areas, this 4-5 times worth of move. Until this far, it was maybe, let's say, 5 times worth of move. It reduced 1 times, still they have got 3 times worth of profit left in their hand. Market went higher again. Now they have more profit in their hand. They have secured maybe some profit, maybe some people invested here. Now from here, if it can give even a move like this big, okay, like let's say from this low to that, if it can give a move like that, I don't really look into charts that way, but I'm just expecting something like this. What is the price? 20,611. okay, let's see. If it's not perfect, but let's see, 20,500 or 600, that range, if someday price can reach or not. What I will do is, it gonna take time, not tomorrow, okay, don't think that way. I'm gonna put a price prediction line over there, PP line, ATH. Today's date is 29/02/2024. I'm expecting something like that. Let's see. And I will lock it on my chart. Okay, this is the future I'm expecting. I don't know if that is something good to do or not. On the monthly chart, that's your first fair value that should act as a breakaway gap. Market can trade it but cannot completely fill it up. So if that happens, then this is your first fair value. From here, market is going higher. Where? Above the retracement high, above this high. Now above here, it still didn't created a fair value, but at this level I can see a small little fair value over there. It has done that also. If you look into that move, it has created breakaway gap here, fair value gap here. On the monthly level, I have more fair values. So why I said market will not go below that level, that I was actually showing you guys. Look at that. That level is your breakaway gap, and the level I was talking that market will not break this anytime soon, that is your monthly new fair value, from where market can reverse. And where is it sitting? Right at that level on the daily. Okay, so market will either not fill it up or it will not trade at all. So I'm expecting it will not trade at all, just because of that daily resistance level, the 5 types of resistance it has around that. If ICT thing is a true thing, okay, this algorithm, that, if it is a true thing, and if market is working like that way, then that level should not be broken anytime soon. Okay, even if market comes here, it to break this, market has to take that high one more time, create a new all-time high, then it can come for that global financial crisis one more time in our life. Okay, that's what I'm expecting. Anyway, it's been a very long time, guys. I'm off, it's almost morning. Yeah, I saw your comment but replying late. If you are still here, good night. Shiva, how that 2 candle VI became FVG, please explain. 2 candle VI became FVG, this part I think I'm reading it after a long time, but if you have found your answer, let me know. Shiva, if you're still here, I'm sorry, I'm not too good at reading comments. I'm good at explaining things, and when I explain, you're talking about this, if this you're talking about this, I have already I think cleared your answer, because that area market has never traded a single lot of this NQ100 inside of that area. Okay, and that was actually the contract, new contract shift, if I'm not wrong. December 2nd week market shifted to a new contract. NQH daily, no, oh, that's the June March contract. The December contract, actually I had to look into that area, but it is what it is, no problemo. I hope I have explained the thing that you are willing to learn. Yeah, so that is the December contract, and this is March contract, so it's not showing anything around this area on the daily, but on the NQ, the full contract that I can see, this is the area that I was talking about. So yeah, I mean, Shiva, I think I have explained the thing that you were asking the question, because of the opening and closing of the previous day. Okay, like this day finished here, so the candle closed here. The next day, yes, we know we can expect some volume imbalances, but the optimal opening range or price was here, market opened from there. As a result, this became the opening gap, but inside of the gap, that specific area, nothing was traded. Why? Because previous day market closed here, the very next day market opened here, so from this to this there was no trade. But since market was trading this week, during this week was created, okay, in the lower time frame, let me go to a reply mode. This is the last so that is where market opened, this is where, okay, and that is, this is where market previous day closed. Look at the day over here, it closed 7th December, it closed on this candle's closing price. This is a black candle, so it should close at the lower portion, that is the closing. This is a black or green, okay, it's a green candle at the very starting of the next day. Look at the day on this candle, it's 6 p.m. and this is 2 p.m. okay, so 5 p.m. market closes, 6 p.m. 1 hour gap. During that gap, market from 6 p.m. the Asia session starts. This is where Asia open started, market opened here. When market was trading during the day or throughout the day, it has traded until this far, but it closed here on the previous day, it opened here, then there is no trade in between these lines. Okay, when that candle traded up until this far, this is where we had trade. From that area until this area we had trades, but what about the rest of the area? We had previous day some trades up until that far, then this much is the liquidity void. There is not a single bloody trade happened inside of this range. So price from 6066, like 16,066. I'm counting the last 4 digit because it's still in the same thousand range. So 66 to 98, 66 98, which is $32. This $32 range, there was no trade. Okay, that turns this area as the liquidity void area. There is no liquidity inside of that area, nothing here. This happened, maybe some revenue or whatever, like the dividends or something they can offer during the new contract or something. I really don't know what exactly can be the reason for liquidity void, but it's a new day opening gap. Inside of that you see this liquidity void. Every other new day opening gap you will find market has already traded above lower. Even if it wants to continue lower, it will first fill up the gap, then it will continue lower. For example, today what happened, like it's a daily, let me go, I'm looking into the wrong area again. Where is it, yeah, here. Let me go to hourly so that you can find that area. This, yeah, see, market previous day closed here, this day opened here, so it filled up that area so that there is no gap or there is no liquidity void. It filled that up, again went inside of that range. After that it continued, it moved. Today market finished here, opened here, this gap it has filled up by this much. I still have some liquidity void over there for today, but I believe if market is willing to go higher, it will fill up that lower portion as well of the gap, then it will go higher. That's how I look into these things. You see, like once it opened here, look, in 1 minute you will find it out even better. This is where opened, this is where yesterday closed or previous day closed. From this week until this week there is nothing. Okay, this is a pure gap, this is a liquidity void, so market should fill it up. If it wants to go higher or lower, doesn't matter, whatever direction it is choosing, if it wants to do that, I believe it can fill it up and then go higher, or it can leave it like this for the rest of the session, the whole entire session. The same thing happened on, okay, I have already removed that one, so forget about that. On the daily level or yesterday's level as well, it filled up, then it continued lower, same thing, it will filled up, either it will continue lower or higher, that is depending on from where it is going from, what level you are anticipating, that sort of things, and what can be the possible reason for market to go higher, which is of course the buy side liquidities and even that. So I have now these two range as my new day opening gap, and inside of that I have these liquidity voids. If it's filled, I will avoid this and keep the gap only, new day opening gap. If it's not filled, for the rest of the day I have to keep those levels as well in my chart. Okay, where am I? 15 minutes. Okay, if this part is not filled, for the rest of the day I have to keep this in my chart. Why? Because market can easily come to that level and then it can bounce back from there, this area. And for example, I'm targeting this low as my liquidity and I have this void over there. Market can easily found resistance here, just trade into that and then jump there. This is a stronger point for me now than a 15 minutes or hourly fair value for me. Okay, whatever, if there is a 15 minutes fair value, which it is also creating around that area, if there is this fair value, it is more strong for me to look into that small 1 minute area that had liquidity void than the 15 minutes fair value, because I believe that has the power to send price higher or even lower if it breaks below that. And from where it is going, the same thing, first fair value and the second fair value concept. So the breakaway gap was not traded at all. On the other hand, the first fair value was completely traded, almost. Okay, it not completely, almost. So these are the areas I'm keeping my eye for the rest of the day, like today's silver bullet or whatever it is. Whatever market can do, let it do. Until the silver bullet, I'm not willing to take any more trades. Okay, because London and New York, they have the volatility. At least if you enter into a trade, it can go a direction quickly. If that volatility is not there, you will have to find something in 1 minute, like this. Okay, like this. Look at those candles, how beautiful, right? Look, this is the 6 p.m 7 p.m whatever, the Asia opening. During the Asia session, look, what is this? One inside of another, like what the hell is happening right around these areas? But right when the 2 a.m started, okay, the New York session here, yes, it still has something, but look all these times that it has taken to do all this. 2 a.m 3 candle, all these 1 hours 2 hours worth of move completed, started going lower. Silver bullet 3 a.m started, that was the move for within, like from the PM session, like market opened at 6 p.m until 2 a.m, this is the move of the market. From 2 to 3, that is the move. Like if you even calculate the move of that, okay, that's 35 handle. Within 2 to 3, 138 handle, 1 hour move. From 3, within next 1 hour, which is until 4, it gave me that low, 48 handle. So why I have to be sitting in front of my computer during that? When you picked my question, I'm not in front of the computer. That's my that is my question, and I will try to message you in the comment section. No, okay, so when you picked my question, I'm not in front of my computer. That is my question. Okay, so I hope you got the answer why I'm saying that that 2 candles area is still a strong, or like it's a fair value as well, like it's a strong area because of that, like the opening and the closing of previous day and current day, it's creating a huge gap. There were no trade during that moment, so yeah, market has to fill up that gap. And it's been a very long time. Thanks a lot everyone. I don't know how much I was able to give you all, but if okay, just a second guys, my elder brother is actually sending me something. Express funded account performance, yep, I might be getting a good news pretty soon. Yeah, anyway, so same thing, starts with a consolidation. Remember ICT said market will start with a consolidation, then it will give you a expansion. Now this expansion, if it can expand lower, then I can look for something like this, okay, buy long, because it's in a valid area. When it expands lower, it will cover up the new day opening gap, then accumulation, manipulation, distribution, retest or revisit of those area, and then continuation, things like that. Anyway, yeah, I want to actually end the stream here, so hope it was insightful to you guys. If not, again, I'm sorry for wasting your time. Until next time, take a very good care and bye bye.